So you can start the session.
Okay, we'll start. We'll introduce Vijay and Push-up.
Premnath sir is also joined, sir.
Right.
So your voice is not audible.
Good morning, all members, for participating on this webinar on CBS controls by Premnath and Srinivas. Morning, members. Today we have a session on CBS controls, data extraction, and data analytics. And to address on these topics, we have CA Vijay Srinivas and CA Premnath from Hyderabad, who will be sharing their rich experience in terms of how this data analytics and data extraction has to be done. Friends, this is basically designed specifically with reference to the bank audit. Since another 10 days, our bank audits will start, and both these members are experts in the process of data extraction and analytics, and they will also share their rich experience in how the controls, how the CBS controls, what are all the keys that have to be used in collecting and extracting the data. Since the branches won't give more than 3 to 5 days time, I think this session would be very interesting and very absorbing for all of you. Before I request CA Vijay Srinivas to address on this topic, I would like to briefly introduce him. CA Vijay Srinivas is based out from Hyderabad and is in practice for more than 18 years. He is a MCOM and a chartered accountant. He is also qualified insolvency professional, a certified information system auditor, CISA from USA, and a certified fraud examiner by ACFE from USA. From the institute side, he is also qualified an anti-money laundering specialist, a diploma in DISA of the CA Institute, a FAFD from the CA Institute, a concurrent auditor, and Ind AS and indirect tax specialist. He is also certified in cyber security. His specialized areas are information systems audit, forensic audits, and fraud investigation, fraud and risk management services, and data analytics. He has been recognized by the Institute, has been a member of the Skill Enrichment Board of ICAI for the current year 21. He has been the secretary of ICAI Hyderabad chapter. He has been the secretary of CFE chapter of Hyderabad and has been a treasurer of ICAI. And his accomplishments are in the information systems audit and review of IT framework of various banks and NBFCs. He's been conducted hands-on experience in terms of forensic audits, fraud and risk management of various banks. He is on the ASM audit. He's doing the ASM audit of State Bank of India, management audit of Union Bank of India, due diligence of various listed and unlisted companies, and he's been hands-on experience of statutory audit, concurrent audit, revenue audit, and he's been a guest lecturer and addressed members on various workshops on bank fraud, Excel as audit tool, data analytics for bank inspection, to name a few. He's also having YouTube channels on a few minutes of audit and 2 minutes of Excel. So with this brief introduction, I request CA Vijay Srinivas to address the members. Thank you very much.
Sorry, I'm sorry.
I'm sorry. Is it audible now?
Yeah, please. Yeah, now please.
Sorry for that. Sorry for that. I've just carried away with the glitch of Gelly with me. So good morning, friends, and thank you SIRC for inviting us to take up this session. And I know it's busy out there in Hyderabad, the festival mood of Hyderabad members in going for election and all, and at the same time we have this session. So let's try to make these 3 hours more useful for the reason that you're here. And Premnath sir will also be joining shortly. As you all know, the way we present is it's more like a jugalbandi kind of thing. So he pitches in whenever is required, I'll pitch in whenever it is required. So ultimately the motto is to see that the given 10 days of time is properly utilized in executing our bank audits, considering all those new challenges what we have in terms of ICO or whatever. Okay, so what I'll do is I'll display a QR code. So what we have done is we have placed certain files in this Dropbox. So what you members can do is just take a screenshot of this screen, or otherwise you can take a picture of this particular screen, where if you are scanning this particular QR code, you are allowed to access a Dropbox where we kept all those working files what we are going to use today, and also the latest circulars, and including the guidance note issued by the ICAI. And also there is a draft of engagement letter, though guidance note contains that. We made it a little more elaborative, so that particular, which is of course developed by our Vijay Totpalli. So that is there in the same folder, so that also you can please download. So please take time and take a screenshot of this QR code, and otherwise take a picture of this. And if you can scan this QR code, you're allowed to access a Dropbox where you have various number of files. And try to keep this link active till you complete your bank audit, because what we'll be doing is, as and when we come across some important resources, or as and we come across some important discussions, we'll try to paste it into this particular folder so that it will be accessible throughout your bank audit. And I've also placed a couple of shortcuts there, short links there, where it also had the recordings of the earlier bank audit workshops and sessions, so that it might be useful along with the, those 2 minutes of Excel where it might require to use in terms of data analytics. So I'm just holding for a couple of seconds so that you can take a screenshot of this. And of course, while before closing, again, I'll try to share the QR code for the benefit of members who are joining late. As I said, this is the QR code which will allow you to access the Dropbox, which has roughly around 25 to 30 files. Yeah. So as you take up this, this particular today's session has been more on data extraction and all, but at the same time, we'll not, we can't go for a hands-on where I share this and you follow with me, because considering the time what we have. So what I'll do is I'll try to do it in a slow way. Not all the aspects of data analytics, at least the basic important things, because as we all know, given the time permitted, what is best resource available for me, that's where if you can make use, that will be more effective than trying all the tools whatever you can in the given period of time. Ultimately, using the tools is one level, and trying to analyze the result and reporting it is the second challenge. What we have come across is in the earlier bank audits as well, people were enthusiastic and were using various tools, but unfortunately they are not finding, I mean, they are unable to turn those into an end result where it goes into a audit report. So we'll try to address that as well, saying that no, these are the important things what you can make use of. And a couple of days back, Premnath sir was displaying the way you can use Zoho Analytics, the free tool, open source tool, which is available for 14-day trial. We'll try to display that, which is also very effective in terms of using in your audit reporting. Okay. Hope all of you have taken the screenshot. As I said, again, I'll be displaying before we close this today's session. Now to start with, many a time the first question what members ask anytime whenever we take this particular session of CBS controls and data extraction is whether we get the information what we ask for from the bank auditor. And we've been saying that this is an art, the way you extract and all. Okay, keeping apart all those things, what is the best way of communicating is at least draft a letter. One, you can take the hint from the engagement letter drafted in the guidance note, and also, as I said, this particular draft, which not only speaks about the scope and objective, it also highlights the basic information what you look for once you go into the audit. Like if I take you to the screen where I was mentioning this annexure, like these are the various reports. Of course, this was carrying from the last year, so you can see the year a little older, but otherwise you can just find and replace those. But what is important is if you are asking for any report, does it have these basic information? Because as you see, when you generate the CCOD report or any term loan report, certain banks follow certain reporting where you might miss certain things. Like say, for example, in particular bank, I may not have the number of EMIs, or I may not have the loan sanction rate. So it might be following two different reports. So accordingly, you have to identify, saying that whether these basic information is there in the report shared with you, because each one of these will play important in not just classifying whether it is NPA or not, but otherwise also in terms of profiling to understand what kind of what you call control lapses are there, what kind of profile the bank carries, so that accordingly I can schedule my audit procedures now. Okay, so this file again, it's placed in the same Dropbox where we have shared the QR code, so you can just access this. It carries the same name as engagement letter. Okay, now usually, as I said, the session will be the wrapping of regular session will be Premnath sir will be speaking more in terms of the control aspect, because that is more crucial considering the current scenario where ICOFR is playing a major role. You might say bank will give a system generated ICOFR report, or you might say that already pre-filled kind of report. No, that is your responsibility, because you are communicating that to your central auditor, not to any other regulatory. And you being the team of central audit as the part of branch auditor, obviously it plays so crucial for you to see whether that ICOFR in terms of each of the transactions what bank deal with has been identified in the IFC. First of all, IFC is there with regard to that. If it is there, then what are the controls? That's where your role comes into. Okay, so you can customize that particular report. Anyway, that part Premnath sir will be dealing with. I'll not be getting into that. Okay. Now, to start with, we'll take up a simple trial balance to extract. And extracting has been a regular kind of display across various sessions taken by me or Premnath or other faculty. But still, we'll try to, because trial balance plays a very, very important role in terms of not just identifying the sample, also in terms of stratifying, or also in terms of what is the way to see that you're focusing more on the crucial areas than getting along with the flow. Okay, so I'll take this trial balance, a dummy trial balance, and try to extract. You can just follow me. Now, before we get into this extraction, let me tell you, when it comes to trial balance, there will be two kind of reports provided to you. One, the end of the day report, or so-called, or even the daily NPA reports, the fancy term what we've been using from June 2021 onwards, the daily NPA report, which is again being generated from the report server. As you all know, bank carries two of these servers. One is a live server, one is the reporting server. And whatever reports we ask might be generated from out of these two. One, if I'm asking about CCOD or term loan files, or even the trial balance, that will be generated from the live server. But when we speak about so-called daily NPA report, or exceptional report, or early warning signals, all these, I mean, I believe all of you know that for the last 2 years onwards, every bank has configured an exceptional report which is drafted based on the early warning signals. Like if I take an example of IDBI, they call it SAJAT, SAJJAT. Likewise, each bank has named its own early warning signal files. So that also you can ask for, saying that what is the report name you use for exceptional or the early warning report, and accordingly you can generate. It contains all, including the regular daily NPA what we were discussing about. Okay, these are the reports which are generated from the end of the day report. That means that is be sitting in the report server. Now, why I should be knowing this is, if I am generating from a live server, the kind of delimitation, the kind of format what a text file or RPT file follows is a fixed delimited. That means like SBI follows a special character of a tube, okay, or some might follow something like a comma, or something like what you call semicolon kind of thing. When it is generated from the report server, most of the time it will be fixed with, like if I say roughly around 145 or 234, depending on the kind of configuration. Okay. Now, based on that, I have to extract the relevant report into my Excel, and that's how we are trying to do the analysis. Because if it is in a structured form, then only I'll be in a position to whatever analytics. Okay. So of course, you might say a couple of what you call open tools have come in place where you can import directly and do this analysis. But as I said, when we say about open tools, again, we speak about confidentiality, all that matters. Okay. Now, let's take up this normal trial balance and see how we can extract. Now, while extracting, for those who are following the latest version, the steps will be different. And for those who are using prior to 2016 version or up to 2016, the steps would be different. But no matter what, the easiest or the best way is, instead of trying to import from the data, this better way is copy and paste in your Excel. Let's say I'm going to copy these and paste it in my Excel under A1 cell. Okay, so this is the much easiest way than importing, because if you are trying to import, if it is the latest version, it will try to connect to the export ETL concept, where it will ask you to transform and all. So we will not get into that. We'll go with the basic version where we copy and paste into our Excel. That's the first step what we have done. Now, once we have done, because as I said, this will be generated from a report server, I can use a fixed width kind of thing. So what I'll do is I'll go with the fixed width, because as you can see, even otherwise we don't have any delimiters like comma or a special character. Okay, these plus and minus is nothing but it's a debit or credit. That's the indication of this plus or minus. So nothing to do with the delimitation. So what I'll do is I'll do a fixed width extraction of this. And while doing fixed width, it's I'll just share you a couple of more important aspects as well. One, you need to understand where to paste your fixed width. For that, whether it is trial balance or for that matter any kind of report, you can use this particular function called len, which speaks about the length of any given text or any given string value, so that you can identify what is the length of your entire row. If in case you have to demarcate based on certain fixed weight, that will be helpful. Say for example, I want to demonstrate saying that what is the length of each of this row. So I can just say len, or somewhere into the each of the row, I'm going to say len and check that particular length. And if I copy the same formula across, I can see that the length of this trial balance generated by, of course, this is of SBI, which says it is 223. Now, why I should be knowing this is, if I know the length and if I know from where this SBI NET has started, let's say, for example, I want to check where this SBI net heading has started. So I can use one more function called find, where I just want to find where this heading is. Okay, so I'm going to say is equal to find. The text is SBI net. Within the given text, I'll just say enter. So it says it is starting at 209. So that means I can put a fixed width exactly at 209. How do you do is, let's say I'm selecting this text to column, and if I go to the fixed width, as you can see on the top of your preview, you have all those numbers which stops up to 223. So you know, if it is 209, you can say exactly at this I'm going to place my partition, something like that. Of course, when you will be using that is if you are unable to do the markation based on the headings. So that's where your combination of find and length will be useful, not only for the trial balance, for any kind of report, provided it is generated from the report server, which is more of a fixed width kind of thing. Okay. Now that's one small tip what you can follow. Just repeat len and fe and find are the two functions what you can use to identify what is the location of various headings. Now to start off with, trial balance is much more simpler compared to any other report, because hardly you will have some six headings. So I'm going to use text to columns. Before I do, let me just delete, because it might warn you saying that some information is there, you want to replace kind of thing. Let me just delete whatever workings I have done over here. Yes, now let's start. Text to columns, next, and I'm going to use the heading as it is. So I'm going to use the headings. Now here also account number you have, and then you have particulars, then you have the respective debit credit amount. If you see in Excel, all the time anything other than text will be right aligned. Could be date, could be number, could be time, or anything with regard to the text will be always left aligned. So even otherwise you are confused where to place the partition, you can just follow the kind of data type what you are dealing with. Now if you see here, account number is left aligned because obviously they wanted it to be alphanumeric or a text format. And it's also good for us, because if I am having a text format, I can do Vlookup much comfortably. Because it is left aligned, I don't need to worry about the starting point. I just need to worry about the ending point. Now this being a text, I can say that this particular partition is exactly starting from the where my text is aligned, that is left aligned. Okay, so first part we have taken care. Now moving ahead, then you have the opening balances. Now where to put the partition? As I said, easiest way, probably you can just take the lead about the way your headings are marked. So, okay, then I want to let's retain this plus or minus because I just want to have the debit and credits identified properly. I might place my partition exactly one before plus and one after plus. Thereby, I'm retaining the amounts in the right aligned format, and I'm also marking the debit and credit. Then proceeding with wherever you don't require, you just double click that partition. As I said, single click will place the partition, double click will remove the partition. Proceeding with, will again follow the same where this is right aligned, so I can place my partition exactly over here, putting a mark between the debit and credit or whatever. Then do with the same with the other parts as well, and that should be sufficient for us to come out with a proper record. Okay. Now this is the first step what we have done, where we put partition based on the alignment of the text or numbers, or by taking the lead from the heading part where it has marked it. Okay. Now, once we have done, the next step is what is the format you want to retain. Like if I go to the next step, it says all the numbers, wherever it is in the number format, that will be converted into a number. Dates will be in the dates format. Rest of all will be text. Now, if I say finish, I'll be losing the font format of these account numbers, because actually that was meant to be in a text format. But if I say finish, that will be converted into a number, which I don't want. Why I don't want is if it is in a text format, as I said, that will be easy for me to filter, to do Vlookup, or to do any kind of reference creation. So I want to retain this account as the text format. Rest of all, I'm not bothered. Let the numbers be converted into the number. I'll say finish. I'll set this warning because we have done some exercise in the adjacent columns. So that's the warning about it. Fine. So first part we have taken care, where we got the entire trial balance properly aligned. So I can just auto fit this to get the alignment properly. As you click over on the top, just double click any particular column, it will auto fit the entire sequence. Now, once we have, I'll be having the entire thing. Now, if in case you want to get rid of all these junk data. Now, within this junk data, one more aspect is this question mark, which is actually not a text, but an object, that is a picture or an icon. Not only in bank audit, if you are exporting in the regular audit also, maybe GST or tax audit, if you are exporting from SAP or any Oracle financials, you'll see that these objects keeps coming into your Excel. You don't want to have that. So best way of doing this is just go to the home tab, find select, and select the objects. Once you select the objects, of course it doesn't have any objects, but if in case you have any objects like picture and all, it will select that. So at one go you can delete all those. Now I want to get rid of all the headers which is been repeating, all the footers which is repeating. Now I'll just share a simple technique. One, just place your cursor on the account or the first label heading. Use Control Shift and End. Let me type over here, Control plus Shift plus End. So that way you're selecting the entire table right from the beginning to the end of your report. Okay, once I say Control Shift End, okay, you have selected the data. Now you want to apply a filter so that you get rid of all the junk data. Now there is another shortcut. I believe most of you know this, Control plus Shift plus L, which will help apply a filter on the selected data. So first step, Control Shift End, then you say Control Shift L, thereby you apply a filter. And once I apply a filter, I'll retain what is required, what is not required, I can delete. Now, before I proceed, the same steps will be applicable whether it is CCOD or any kind of loan, provided if you can keep 2 points. One, if you have a column which has a date, it's always better to select that particular column, because Excel will auto group those dates. Thereby you can see the year-wise dates, and rest of all you can easily delete. If you don't have a date column, like in this case, if I have a number, what I can do is I'll apply the filter so that numbers will be always on the top and text will be going to the bottom. So that way also you can filter. Okay. Now let me just see, Control Shift End, Control Shift L. So what it has done is it has applied a filter on the given row from where we have started. Now I'll just select the data and uncheck what is not required. Okay, so if you see the entire data, now in this case the numbers are placed below because we ensured that this is saved as a text format. That's the reason it is showing. Otherwise it would have been on the top. But anyway, it doesn't take much time, because what we are doing is once in a given branch, we are not going to repeat this. So I just need to ensure that I'm selecting what is not required, like in this case of the top 2 rows, and of course the last part. You just select those. So what you get to see is only the junk data. Rest of the important data is there hidden. While I place the cursor on the row which is following the heading, again I'll repeat this Control Shift N so that I'll select, and after doing that I'll use an shortcut called Control plus minus. That means I'm deleting the selected data. So because what is that we are deleting? Obviously the one which you have selected. Now before I proceed with deleting, let me caution you, if you are using any version prior to 2010 13, that is either 2007 or 2010, once you have applied a filter, try to repeat that twice. Because what I meant to say, say for example you have done this, okay, you have done this selection, or this one, gone down, selected these, and you said okay. Once you have done, you do again the drop down and again say okay. This is a glitch what we had in the earlier version, where you have to double do that to ensure that whatever is displayed, that only be deleted, not the other one. Otherwise, if you don't do that, if you delete, it might even delete the hidden rows as well, not only the visible. So this is one part, if you can remember in using 2007 and 10, is just twice apply the filter, then you perform whatever you have to. Rest of the versions 2013, 16, 19, that has been taken care by the Excel. Now place your cursor over here, Control Shift N, Control minus. It will ask whether you want to delete it. Yes. And once you remove the filter, Control Shift L, what you got is your trial balance entirely displayed in a proper form. Now you can do whatever analysis you have to make this. Okay. Now this is the first step what we have done at this point of time in refining the trial balance. Now once you have done that, the second thing, if you go to the engagement letter, we have asked about the advances codes as well, because our focus even otherwise based on the advances is the first task what we'll be considering. So I need to identify what are the accounts which starts with a particular account code, which will help me identify what is an advance or what is not. Say for example, if I take, let's assume that these are the codes which branch follows or the particular bank follows, saying that any of these any of the accounts which are starting with these codes are considered as an advances. So in that case, I need to ensure that I perform a Vlookup, saying that out of these particular things, what are those which forms under advances. Okay, so what I'll do next is I'll just do a Vlookup. Okay, let's not waste time in understanding the Vlookup, because as I said, I've already placed the shortcut in your folder. You can just visit that particular video to understand Vlookup in a 2 minutes of time. Okay, so what I'm doing is I'm just say type. I want to identify type, and I'm more interested in advances. So what I'm going to do is I'll do a Vlookup, because we are looking for only starting 3 digits of the codes, that is the advanced codes what we have identified. So I'm going to say Vlookup. I want only the first 3 digits, that is left of the particular account code, and this I want to match with the advanced codes what is provided with the bank by the bank with me. Okay, then I'll say F4. Why I'm doing F4? Because if I'm copying that should not disturb my formula. Out of these, I'm looking for the second column value, that is whether it is advanced or not, and I'm looking for 0, that is exact match. Why? Because these accounts are stored in text format, that is where I'm using 0. As I said, don't get confused about the Vlookup and all. You can visit the shortcut. It's very much elaborative in terms of how to use Vlookup and all. I just copy. Now, once I've copied, let me apply a filter on the given row using the same Control Shift L and filter. Let me just check somewhere. Advanced codes. I believe this is one example. Or what I'll do is, instead of confusing, I'll just extract that 3 digits first here, then I'll do Vlookup. So I'm going to say left of this, I want 3 digits, and copy it across. Then based on this, I can do the Vlookup. So I'm going to check this, and before that, let me ensure this thing is in a text format. So just say text to columns, and ensure that that is in text format. I'm going to say text to ensure that if in case there are any numbers, and also let's do the same with over here also to ensure that these are in text to columns. Now both are in text format, because for VLOOKUP, it is very important that the lookup value and the first column of your table array should be of same data type. That's a challenge. So I'm going to look for this in the given data, F4, out of which I'm looking for second column data as an exact value. Hope we don't have any columns. Yes. So I can just copy these. Now let's apply a filter. I'll call it as type this one. This is code. And don't worry about it. I believe this video being recorded. So if in case, you can just revisit once it is uploaded, check back what are the steps are performed. Now these are all the one which are classified as advances. So what I'll be doing is I'll be checking the sum of this particular thing. Now what we do is, obviously we can do subtotal, is it not? So I can apply a subtotal of 9, that is the total of what is being displayed, and I select the entire row, copy and paste. So I got the subtotal of advances, and this is where the net of this is what I'll be checking whether the same thing has been communicated as the advances of the branch. Okay. Now not only that, it will also be helpful to identify what kind of sample size I should be selecting. Okay. Let me do formatting of this so that we can see proper currency thing. Okay. So these are the various advances what you have, and accordingly you can perform. Now before we take up this, what exactly is to be, I've also dumped the same thing. Yeah, so I've also dumped the same thing. So what we do is we get the sum of those advances and identify. I've just used a sample SUMIFS formula where I'm saying the net of the particular advances, wherever it is matching with this thing, I'll get a sample of course, this is the earlier one. So as of now, it is 10%, which I have to be looking into. Now this is the sample size, which I'll be keeping in view while sampling the advances. So now, before we proceed about what is the importance of each of the line item in the trial balance to see that which part of my LFER will be hit, we'll listen from Premnath sir in terms of the controls and all. Then again, we'll get back to the data extraction mode. So Premnath sir.
Yes, okay. Is
I'll
my
give the
voice audible?
One second.
Is my voice audible?
Yes, sir, it is audible. I made you presenter, sir. Now you can share the screen.
Right. Okay. Okay. Thank you very much. At the outset, I thank SIRC for giving me this opportunity. Let me just see from where I can share. Am I able to share the screen?
Yeah,
Yes,
it
sir.
is, PowerPoint.
Now, whole screen if I want to do it?
Just click on that screen, sir, and the entire window.
So we are like,
Same screen. Now I'll just check whether the Alt tab is Alt tab working?
sir, the
Yeah,
screen is not visible, sir, right now. You just need to
Sorry?
share. The screen is not visible right now, sir.
Okay, if I want to use Alt tab,
Yes,
Yeah,
sir,
you
you can do that. But you need to share your screen right now. We are not seeing your screen, sir. Yes, sir. Yes,
now it
sir.
is visible.
Yes, sir.
is Alt tab working?
Yeah,
Yes,
perfect.
sir.
It is working, sir.
Right?
Yeah.
Okay. Right. Thank you. Thank you very much.
This
I
in
think
his
I keep troubling. Yeah. Is it the screen is working now?
The screen is working, sir, but you need to put the PowerPoint in the slideshow mode, sir. Just press F5
That's
or
okay. Yeah. That's okay. That's okay. That's
yes, sir.
right. Okay.
Yes, fine, sir.
Yeah.
Thank
Thank you. Thank you, SIRC, for giving me this opportunity. So today's session is more on the data analytics for reporting under internal financial controls and LFR. So what I do is I'll take up few examples of the control weaknesses. Then I'll try to relate that to the screens. and the RCM, risk control matrix, and to the LFAR where we need to report this. So this is the objective for next 1 hour of time. So before that, we need to understand this control weakness. The total banking industry in Indian economy, the GDP is 232.89 lakh crores. Money supply 199 lakh crores out of this GDP generated. And bank credit from 199 lakh crores is 182 lakh crores. Out of this 182 lakh crores, the NPAs, the declared NPAs are 13 lakh crores, undeclared still much more. Banking frauds 3.0 lakh crores. Still again, there are undeclared banking frauds. These are which are declared to the RBI, and from there to the CBI and so on and so on. Still, so many cases are under investigation. Okay. Be that as it is, all this NPAs and banking fraud and all is the result of ineffective control environment in the banking. That ineffective control environment in banking, to what extent, let us see from the risk control matrix itself for better understanding. Look at the risk control matrix of any bank. The risk control matrix will be something like this. I am talking about a gold loan, one product. I'm talking about one product. So here, if you look at risk identification as a part of internal financial controls, the management, it's the responsible internal control system is the responsibility of the management. So management has to design the risk control matrix. Management has to test it, and then give it to the auditors. The auditors will pick the samples, they will test it, and the assertions made by the management that the internal control system is working well. So the auditors will agree to that assertions made by the management. So as a part of that, it is a primary duty of the management to give us risk identification and controls. This is all risk identification. Then this is control environment assessment, and this is financial reporting risk. It has 3 parts. So the first part is they have to identify the risk. Now, if they don't identify the risk, it is for us to tell that the management has not identified proper risks. Make a note of this. Management can make an errors. Management can make an errors in or management can be ineffective in identifying the proper risks. Management can be ineffective in designing the control environment. Management can be ineffective in financial reporting, in linking to the financial reporting risk. So coming back, risk identification. For one product, sourcing a client. Say for example, selling LC, BG and all is a product, is a sale. Sourcing a client for that. In that sourcing, you have various other sub-processes are there among this main process. The main process is only one here. Okay. Now you have various other processes in this. So for each activity is numbered. And there are, for the product what I am discussing here now, there are 16 sub-processes numbers. And one of such processes collection of documents and due diligence, engagement of appraiser, and so many other things are there in this. Similarly, at this point of time, what is the risk? Now, the first risk is the risk of incomplete, inadequate, incorrect documentation that can happen. What is risk? The definition of risk is what can go wrong. What can go wrong is incomplete, inadequate documentation can result. That is one risk. Okay, if that result, how will that ineffective risk will reflect? The ineffective risk will reflect in terms of casual factors like unavailability of the required documents such as KYC documents, drawing DP note, and so on, negligence of officials, then no or inadequate check performed with respect to negative screening, duplicate checks, credit history through credit information searching, intent to commit fraud, all these things, what I said here, these are all casual factors. This risk the risk of inadequate, incomplete will result into this issue. Okay. Now to control, up to this it is risk identified. Now this risk is identified. Now what is the control? The control assessment. Now comes control. Now what is the control? Now the following documents are obtained to see that this risk doesn't happen. What are the documents? You know very well, DP note, delivery, gold ornament, and so on, photographs, borrower's photographs, memorandum in respect of gold ornament deposited, proof of evidencing agriculture activity. All this needs to be taken to rule out the risk stated here. Okay. Now, how often you should do it? It's a transaction. Whenever transaction occurs, you need to do this. Now, is this control, what we have said here, collecting all these things, is it a manual? Is this a manual control or a system control? The bank is saying this is a system control. This is a manual control. Okay. Now comes here. What is the nature of control here? They have not. Is it a preventive control or a detective control? But management is saying here not applicable, but it should be a preventive control so that there will not be any loss. Now, what is the how does this control is monitored? With a maker and checker? You can see here automated maker and checker and maker and checker. There are two types of controls in this. Now coming back here, I'm taking a little elaborate so that I'll combine with a risk, with the risk has already happened in the banks, to that we'll relate, and accordingly we'll take it to the LFAR. Now coming back here, now whether if there is a risk of two photographs not taken, if there is a risk of agreement not taken, if there is a risk of drawing power, sorry, DP note is not taken, if there is a risk that the agreement evidencing agriculture is not taken, if there is a risk that the customer loan account description, journal entry, photographs are not fixed, if this is happening, if this happens, what is the impact? Whether your P&L, whether your income and expenditure will affect? It says not applicable. If the stated risk here happens, management is saying there will not have any impact on income and expenditure and assets and liability, and it is not going to affect your presentation. Now this is how the management has given this is how the management has given the risk control matrix. Now come back. Now I hope you are clear with what is internal financial control, what is risk control matrix. Now come back to the case. Now come back to the case study. This is a case study where SBI has filed a case in Visakhapatnam very recently. For your seeing is believing, so I'll just display. This is what. So this is the State Bank of India has filed a case on to the Superintendent of Police CBI on 4th February 2021. The contents I have taken it here into this file for easy purpose. Now here, look at this. Multiple gold loans were availed by 246 members. That is 319 accounts involving an amount of 699 lakhs, where gold loan banks are not traceable, which loans were sanctioned since 2018 onwards. Number one. Now they say preliminary investigation. In that preliminary investigation, the gold bags were not matching. Next, most of the loan applicants do not bear photographs nor adhered to KYC. Signatures are required to the bank. Signatures of borrowers are differing in few cases. Next, gold loans were not pledged in the CBS report. They have not marked as a pledging. In 37 cases, gold loans sanctioned were more than the value of ornaments. Now this is a risk, right? Whether this risk is covered in the process, yes, they have covered that risk here, inadequate documentation. Now, whether this inadequate documentation has resulted into a loss, yes, all these fraudulent gold loans has a loss, has hit the balance sheet, and they have provided a loss to the extent of 699 plus plus interest charges and so on and so on. They have marked it as a loss. Now come back here. Now what this is what we need to understand here. They have identified a risk. They have given the risk factors, but you can see here when the risk has hit, they are silent about and saying that it will not result in any financial reporting risk. Now this is what I would like to request the members to be very careful in understanding each line item of the risk control matrix that they have provided to us for signing. I think most of us will understand. Last time, after the audit is completed, then this risk control matrix sheet is made available to the auditors after they have returned to their offices, and that too after 15 days they have sent this risk control matrix and they have asked to sign it, and the page they have sent is multiple times xeroxed, and except for the bank seal, nothing else is visible on it. And on that, many of our friends or some of our friends have simply put their round seal and signed it and sent it back. Now the question is, if such kind of fraud happens in the branch in which we have audited, and I am giving a true and fair, if I am giving a true and fair and a proper IFC is working, if I am satisfied, if I am giving that yes, the controls are effectively working, if I am saying that the controls are effectively working, and that too in the sample that I have taken, and if in such samples there is an error, now you can understand how serious is our reporting. Hence, what I say is, let us not blindly accept the risk control matrix given by the bankers. Let us debate with them for each and every item of the risk. Not only that. Now you find here, did you anywhere find the risk that the number of gold loans and the gold bags are tallied? Now this is a process. Whether that process is mentioned anywhere, number one. Number two, what about the controls on CBS? Now the CBS controls, if you look at, somewhere they have mentioned it post-sanction, yeah, here. Now somewhere they put it in the CBS, but that's the only place where they have a CBS control. Now this is a control. This is a CBS control, system control, and the rest of it is all manual processing. Or when they give this risk control matrix to you, you can also easily find out how many of such controls are manual. You can see here, I just select only manual. You can see here, there are only 7 manual controls, or let me remove the filters. Yes. Now let us see the total. There are total 15 processes. Out of that 15 processes, let me select the manual. So automated, I am selecting manual. Now, if you look at, there are 11 processes. You can see where my mouse is blinking. Out of 15 processes, 11 processes are manual. And you can see here, and among that, among all the processes, let us again check how many are going to affect your, how many are not applicable cases. We'll see. You can see among all these things, you find 50% of the risks are not going to affect the P&L, and this is how the risk control matrix is designed. Now, I hope I'm clear in communicating to you the way the IFC is prepared by the banker. It is only an eye wash. It's the process, what they are doing is only an eye wash and not a real one. And hence we need to keep raising too many questions. Now, having said about the KYC, let us see whether the KYC related issue here, whether the KYC related issue has been taken care in the internal financial controls or not. Let us just try to look at into this. So I'll just take you quickly through the KYC. So what is KYC? KYC is, you should not have multiple loan accounts. If you or multiple customer IDs, it's not multiple loan accounts. The customer should not have a multiple customer IDs. If you can look at the screen here, this particular case, I've changed the names for confidentiality. Then if you look at the names here, K Geeta, Geeta K, and then Geeta Suresh Kamath. There are 3 customer IDs here. Why this is happening? Let us try to understand why this happens. Now here, at the time of creating a name, it is not like our MCA, wherein you type the name and the DIN creation in MCA. When you create a name, it will go and counter verify with the PAN number. If the PAN number is, if the name is as per PAN number, the DIN number will be allowed. There is a counter verification, and that counter verification is a preventive, not a manual check. Mind this, please. It is not a manual check. It is not a manual maker and checker. It is a preventive check, because it is system preventive controls are there. Now, what about in the banking? What happens in the banking is they will verify the name with the PAN number or Aadhaar number, and sometimes it will automatically pick. Some banks, they are linked to the Aadhaar database and PAN database. The moment the name is, the PAN number is put on there, it will pick up the name. But the problem here is, if one time I come with a PAN number and second time I come with an Aadhaar number, and the name in PAN and the name in Aadhaar will change, like Rohit Kumar Singh in PAN and Singh Rohit Kumar in Aadhaar number, 2 accounts will be definitely created if they are not linking to the CIF. Why they will not link to the CIF? The example I am taking here. You can see here in this example, after all the loan process is happening, after all the loan sanction authority does all these things, then you can look at here whether client already has a CIF. They will ask, if a client already has a CIF, who has to tell that? The client has to tell, sir, I already have a CIF. If the client doesn't tell that I already have a CIF, if the branch manager doesn't ask this, that whether you have a CIF, even if the borrower says, yes, I have a CIF, but the branch manager goes on to create one more CIF, what will stop? Nothing will stop. And that is what you see. This legend is for manual process. This legend is manual process, and this is CBS process, automated control, meaning that the system is asking whether you have an ID. If the borrower says yes, they will ask for it. If the borrower say no, they will create one more, and that's how this is created, and that is how these many names, these many CIFs are created for one single person, meaning there is no system preventive control. It is only a manual control working in the banks. Okay. Now, the point here is how do I verify? And this is what we have done this. How do I verify this? How we have to verify this is, let's go back to the workings here. Yeah. So how we have to verify is, I've already, I think I've already given it. I'll repeat again. So what I'll do is I will collect the loan balancing file. Oh, you must ask the banker to provide the loan master. You must ask the banker to provide the customer master. From the customer master, you can find out. If the banker doesn't give you the customer master, then ask for the loan balancing file, ask for COD file, ask for the deposit file, and these are the three major things that go on in the branch. So once all these three different types of transaction files, if you club together, then automatically that itself will become a master. On this master, you either use sort and filter. If you use sort, then you may not get, because here it is K Geeta and Geeta K. You may filter, but how many names you will go on filtering it? So best way is to use a fuzzy lookup. Now, wherever names you have, all those names you try to put it in one single row. On this, use fuzzy lookup. What is fuzzy lookup is, you can download this fuzzy lookup tool add-on from the internet, Google, and attach to it. Now, once you attach to it, now from here you can start playing. Then click on this fuzzy lookup. Now you will get this within the table 2, where you have all the names, customer names and all. Now you want 2 names. So in brief, what is fuzzy lookup? What it does is, if the name is A, B, C, D, if there is another name in the same database as B, D, C, A, wherein the letters are same, like Geeta K and K Geeta, or like Rohit Kumar Singh and Singh Rohit Kumar. In the same way, if you have name which is typed in a different format but containing more or less the same names, through fuzzy lookup, it will place all those combinations here for each name. Let us run this and see. So I'll say here 2 names, and then I'm saying okay. Now you can see here. So let me just take out all this. Yeah. Just give a minute. Then I'll just say okay. Oh, okay. Something went wrong. I'm just opening the file. Yeah. So once you run that fuzzy lookup, now automatically for each name, it will start throwing the other combination of the name here. Like say, for example, here, Abin Varghese, ABI. So to certain extent, it is matched. You can see Abhishek Srivastav, Abhishek Kumar Srivastav. And these two, it is saying there is a name change in this. So wherever there is a change, then it says 0.9 some ratio, and wherever it is easily matching, it says 1, and so on. So this is how it will throw the most similar name beside this, and then with that we can able to find out these kind of names which are similar to this. So what we are trying to talk here, now we are trying to understand the risk control matrix with respect to the KYC, wherein it is saying that the P&L is not going to be affected. That's what they say, the P&L is not going to be affected. That is what they are writing here. But we are trying to understand here, like say for example, if in this case you have a multiple, this is a deposit, and say this is a loan account. This is a loan account and this is a deposit account, and say these are all another loan accounts. If one loan account becomes bad, whether the other loan account wherein the SIF number is different, will it become bad? It doesn't become bad. If it doesn't become bad, then there is a material misstatement happening. Whether to this extent, the risk control matrix is designed here? No. So what we have to say is, as per this, the management has not identified the risk of duplicate customer IDs, which is resulting in material misstatement of either income or assets, and even presentations may differ. So to this extent, you have to add one more risk to this. So the point what I am trying to emphasize here again and again is, with respect to the internal financial controls, we have to identify the risks in addition to the risks identified by the management in the process, and add a control. And if there is no control environment, you can tell that the risks are the internal financial control system is ineffective. So first thing is, whether are we accepting the risks given? Yes, if I am accepting the risk. Am I accepting the controls? I am accepting the control. Whether the control, if there is a failure in the controls, whether it will affect the P&L, I may not agree. They say not applicable, but you have to say, yes, it has an impact. Number one option. Number two option, risk is not at all identified by the management. Now we have to identify the risk. And for that, whether controls are there in the banking, if controls are not there, tell them that there is a risk and controls are not proper, and it will impact their P&L and balance sheet and other presentation. This is how the internal financial controls reporting system should be reported, should be followed in our IFC certification. Now let's come back to the same thing again here. Now, having said this, there is another way of identifying the control weakness also. Let me take you through this. Now I am taking up different phone numbers. I am taking up the account number and phone number. I have taken the account number and phone number. Once I take the account number and phone number, I will make a pivot table on the phone number. This will be like this. So what I'll do is let me remove this. So I'll take phone number wise names, I'll take, and number of names for each phone number. I'm just taking this. So you can find here, for one certain phone number, for one such phone number, you have 185 accounts. For one phone number, 185. And in that, the example we have just now seen this. Now this person is a proprietor here, and he is a director in this, and he is a partner, and this gentleman is also proprietor, partner, and so on. So there is, you can see here why I am doing this. I have just written down here. Now this has an impact. This many accounts are created. So what I'm doing is, now there is a risk. Now there is a risk that the amounts drawn by the loan can be rotated in other accounts. Whether that risk has happened, whether branch management is verifying that now. Yes, good. Here what we need to do is the risk here is when there are multiple accounts here, there is a possibility when there is a multiple accounts here, when there is a multiple accounts, there is a that risk possibility that the loan amounts may be rotated in the other accounts. Whether this has been identified as a risk, to my mind, this risk is not identified. So when risk is not identified, even controls will also be not identified. If controls are not identified and risk is not identified, they will also not able to tell whether it will impact your P&L or not, like what we have seen now here in this. They have identified a risk. Having identified a risk, they are able to say what happens here. But now, if you have a multiple customer IDs, whether this will affect, they have not done it. So that is a risk, and now I as an auditor has to tell them that multiple customer IDs are existing. For that there is no control, and this is a control weakness, and hence I have to say there is an ineffective controls in customer creations. Okay, is it proved? Can I say that the loan amounts are round tripped or rotated in this? Yes. To prove that, what I am doing is I am taking the account copies of all these account holders and paste it one below another. So as I paste it one below another, I will sort now. Sort not on date wise. Now when I filter it one below another, you can see here, this is one such account. During the year, there are only 6 transactions. And this is another such account where there are 10 transactions. And similarly, you have many accounts where there are multiple transactions during the year. Now, what I am doing here is I'll just take, after pasting one below another, whatever I am doing, I have just written down here. Obtain related party. Related party is not the related party as per the relation defined by the shareholding or directors and all. The related party, what I am saying here is only the account number, like a common bank account number is a common relation, or a common email ID, or a common address, or a common phone number, or common father, and so on. Or if all those common things are in that I am treating it as a related, but not the Companies Act or tax definition of related. Why we are trying to do this is to see whether there are any round tripping is being carried out. Now paste one below the another of those things, and then now sort it on date wise. Now I'm saying sort on account, instead sort on the date wise. Now if I am done this sort date wise, now you can observe here on 3rd April a check is issued to this account number 25 lakhs, and this account number is a related party here with a common phone number, and on 3rd 25 lakhs is withdrawn. 25 lakhs has come into this account, and next again within 2 minutes the cash is withdrawn. Now if you look at the cash scroll, timestamp, you can see when the amount is credited, at what time the amount is credited, and at what time cash is withdrawn, you can find out. And immediately the same cash is deposited here with the same date and timestamp, with a change of just 1 or 2 minutes of difference. The cash is withdrawn from the loan account, gone into the related party, cash is withdrawn, and the same cash is again deposited back in with some other narrations in the books. Now this is about round tripping, and this is happening because of the IFC. They have not identified, there is an ineffective controls around routing and rerouting of that. Now, where do I report this? Where I need to report this is under LFAR. Under LFAR, you find here round tripping of funds. This is where we need to report this under round tripping of funds. Probably we need to report this. So in respect of frauds, this is a process we need to carry out to report under this. Similarly, KYC. Implementation of KYC and all, whether the branch has adequate systems and processes as required to ensure adherence to KYC guidelines and all. Now to report here, I have to carry out all these processes, and all these processes I need to carry out, and accordingly I need to report. Not only reporting in LFAR, please mind it. Whenever we are reporting in LFAR, we are reporting about control weaknesses or some deviations or some instances of deviations we are writing. And why that incidence or deviation will occur? Because there is a control weakness happened. So whether that control weakness is risk is identified, controls are established, whether the controls are followed or not. No. So for every observation we make, we have to first go back to the risk control matrix. For every observation we make, we need to go back to the risk control matrix and see whether such risk is defined, whether controls are existing, whether controls are followed. If not followed, whether it will have any impact on the profit and loss account or not, is what we need to carry out. Meaning that this year or since last year onwards, everything we write, we have to link it to the LFAR, we have to link it to the internal financial controls, or other way around. If I give my LFAR saying that if I am not reporting yes, no, all right, yes, no, yes, no, yes, no, yes, no, if I am writing my LFAR as all yes, 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 followed, and if I give MOC, or if I write somewhere something negative, the immediate thing we'll observe is, now in LFAR you are saying yes, in IFC you are saying no, in MOC you are giving something. There is an inconsistency in our reporting, and that will attract disciplinary mechanism. For example, look at this case here. I hope you can read this. You can read this. What it says is, the bank itself is saying, this is a CBI report filed by Indian Overseas Bank, a public document available on the CBI website. This document is available on the CBI website. I'm just displaying this. You can see here red flags. There were a number of red flags that indicated suspicious fraudulent activities were carried out. Some of them were payments routed through CC accounts were not commensurate with the expenditure. No query has been raised by the bank branch officials while dispersing funds. Any irregularity and unfavorable development shall be brought to the notice. There was no proper upkeeping of voucher. Over dependence on information submitted by the company. All this is further, you can see the branch is commenting on the concurrent auditors have checked the payment of expenditure but without cross-verifying. Now look at the way the branch is commenting on the concurrent auditors. If something goes wrong, they will start blaming us. and at the same time, the branch itself is saying that there are so many red flags, early warning signals. And branch itself is saying that because of the internal control weaknesses, all these things are happening. Now it is saying risk factors arising out of new venture, no prior experience by the company. Whether this risk is identified in the RCM, whether controls are defined. If controls are defined, whether if this happens, whether there is going to affect P&L, yes, it will affect. But to our surprise, this new venture, no proper experience is not taken as a risk factor. And risk has arisen, yes, risk has arisen. And 300 crores of money went out because of this risk. Now, look at here again. Acceptance of agriculture land as a security without considering the provisions of SIRC, because SIRC can be done only on the residential or commercial properties and not on the agriculture land. But the bank has taken this land as a agriculture land as a security. Now, whether is this a risk? Yes, this is a risk. Accepting of security which is not in conformity with the SIRC is a risk. Whether this risk is identified, this risk is not identified, control is not identified, effect is not identified. Whether the risk has happened, yes, the risk has happened here. Meaning, again I say, again I come back to this risk control matrix again here. It is a duty of the management to identify risk. If they have not identified, we have to identify and tell them whether controls are existing or not and its impact. And at the same time, in LFAR also you need to mention this point at appropriate place. Now this is how we need to take it forward, our discussion. I think I have touched upon the important factors of it, of the risk control matrix. And one more thing here is that since this is the related party transactions are rooted into the same thing, you can see here the branch has not identified who are the group members. This is one risk. And not only that, branch is not made, the system is not made as a mandatory. Entering the beneficiary's ownership data is not mandatory. Entering the exceptional debit, cash and credit is not mandatory. Because of these things not made as a mandatory, there are so many issues are happening. And you can see the bank IS audit experience also. Master data field completeness accuracy is not tested. Not only that, no validation controls, no mandatory fields are adequately defined. Mandatory fields are not adequately defined. These are all the control weaknesses which are resulting into too much of risk to the bank. And this is where we need to be very cautious in giving the certificates. I think I will request Vijay sir to continue from here onwards.
Sure, sir.
Yeah.
So you can.
I'll stop.
Yeah, you can make me panelist so that for sharing the screen. You can transfer the screen sharing.
Yes, sir. I will give you the right, sir. I will give you the right, sir.
Yeah, please.
Sir, is it you are made as the presenters?
I believe it's working now. It's displaying.
Yeah, it's working. Yes, it is working.
Thank you, Premnath sir. You know, he's running through various schedules. I believe one more session lined up. Fine, I'll take it from here.
Yeah.
So friends, now that we have seen the importance of controls, and Premnath sir was always referring about linking up each of the line items in terms of control, in terms of reporting as ICAI, and also in terms of reporting as part of your LFAR. Now, how is that we make track of each of that? What is the best way? So I'm just displaying a small demo in terms of once I refine my trial balance, what is the line item each thing has to be linked up to. Let's say, for example, if I'm speaking about advances, I need to ensure which part of my LFAR this advances is hitting, and out of my ICAI, which part of the checklist I'm ensuring that has been taken care. So to keep a track itself is a challenge. To say that no, this have been taken care as part of my checklist, that's one more challenge. So instead of making a note and trying to see that whether it has been satisfied or not, how about taking the same Excel where we have exported the trial balance and try to link up each of the trial balance item with the kind of checklist what we have followed. Say, for example, as a demo, let's assume that my main audit report consists of some annexure 1, 2, 3, 4, 5. Could be regular reporting, or could be a particular sample of accounts which have done a scrutiny and all that I'm reporting, or could be even audit memo what we raise, audit notes what we raise. And let's say if I'm dealing with tax audit, I might have annexure 1, annexure 2, or if I speak about MOC, I might say that this is going into so and so financial statements or in terms of classification. So if I have each of those items, could be like in speak about interest submission, any other confirmation, what are the certificates we issue, could be Ghosh Jilani or any other things. So what I can do is I'll just make a list of each of the group, each of the category. And once I have a list, I'll follow a simple Excel technique to give a reference to them. Say, for example, if I want to give this main audit report as a reference, or for that matter, let me say that these are all reports what I'll be linking up for each of the line item of the trial balance. So what I'll do is I'll have a list of all those reports, including the annexures, including the certifications. And to that, let me give a common name. Let's call it as a report name. Okay, let me just zoom. So here we follow a technique called references. Under formulas, you have a name manager where you can create a reference. Say, for example, this is the list what I want to refer. So what I'll do is I'll select those lists which I want to link up and use this under formula bar. You have this option called create from selection. Okay, you have of course various shortcuts using Control Shift F3 and all. So let's make it simple in terms of using the mouse so that other seniors also can follow. So what I'll do is I'll say create from selection from the formula, and I'll say my top row, that is the report name, is the name which I want to call up this. So once I say okay, so it will create something called report name. So when I say report name, it's always going to select this. Likewise, if I say this and say create from selection top row, so whenever I say main audit report, it will be referring to this. Now what I'll be using this is, I'll use this as a drop down for each of the items. Say, for example, for this advances, I want to say that, okay, this advances has to be reported in any of the reports what we are discussing. Let's say, for example, I call it as an LFAR. So what we do is I'll use a drop down. So I'm going to say data. Under data, you have an area called a group called data tools. So under this data tools, you have this option called data validation. Okay, many of youngsters might know this data validation, which is more of a preventive in terms of saying that this cell should accept only this kind of data, something like that. So there I'll define the list. What is the list? I'll call this list. What is the list? List is nothing but the name we given it as report underscore name. Just to repeat, this is the name what we are given. So I'm going to call up that list over here by clicking on data validation, selecting list. I'll say equal to report underscore name. That's the name what we are given. I'll say okay. So once I say okay, I'll get the list of all those menus which we have defined. Now you can keep on adding so that it will get updated over here. Let's say I'm trying to link up this particular line item to LFAR. So that is one point. First point, I'm saying that okay, this particular line item of trial balance should be reflecting in my LFAR. That is one. Now within this LFAR, which part of that report it is addressing? Let's say if I'm speaking about advances, it will be going into group number 5 of your LFAR. So there again, you can have those sublists saying that okay, group number 5 is speaking about advances. So what we do is we give the same name, saying that formulas, create from selection, top row, so that whenever I call up LFAR, I'll get to see the list of these. So here I'll place that particular list. But while placing, how is that I'm going to get the same list which is referred to by here? So it might be calling up any other things. Like in this case, if I see any of these, you can see that it is not displaying Otherwise, when I say LFAR, it is automatically displaying. How it is doing is, we use a particular function called indirect. Don't get confused about this. All these being discussed in the link which I've shared in the same group folder. What is this purpose of indirect is, it might use the text of this and give it as a reference, call it as a reference by using an indirect. So what we have done is, in the adjacent cell, under the data validation, the same data validation tool, we called indirectly whatever is being mentioned over here. So indirectly, it will refer to the cell called A20. And if it is speaking about LFAR, indirectly it is calling the text of LFAR, thereby it is picking up from this given list. So if I'm in this case, if I'm selecting something called main audit report, obviously my list also will change accordingly. Say main audit report annexure A 1, 2, 3, 4. If I'm speaking about tax audit report, immediately my list also will change as per the tax audit report. Okay, I think we haven't defined. Let me just define the tax audit report also. I'm going to say create from selection, top row, come back over here. Once I have, I'll be getting only those relevant annexures. So this way, one, you are having a checklist about what is the each line item impacting, whether it is going into the respective LFAR or could be MOC or whatever. Once you have identified, and thereby you are selecting the sub items as well, saying that okay, it goes into the respective advances 5, and you can keep on adding within again advances 5. You might speak about some relevant point in terms of classification, that is IRAC norms kind of thing. Then again you can keep on adding those points. So this is one way of keeping track of each of the line items. You can have n number of columns. You can keep on adding more and more depending on what sub level I have, what is the sub point I want to carry a kind of thing. Okay, so I'm just giving a hint because this is not a hands-on kind of a session. So just a couple of tips in terms of grouping a particular annexures, calling those group for each of the line of the LFAR, and thereby once you apply a filter on these, you can see if I'm filtering advances, I'll get to see which point of this particular heading is hitting and which point of LFAR it is hitting, or which point of ICAI report I'm hitting. All those I can keep add by using these two important aspects, that is creating from the selection by defining a name to that particular, and thereby using a data list where you call up those list of those drop down. Okay, this is one simple technique what you can follow. Now, so far we have dealt with the trial balances where we said, okay, once we define the trial balance, I might sum up those advances based on wherever the heading is meaning to be advances. I'm going to get the sum of those. Thereby, if I'm saying that 10% is my sample size, I'll be applying a 10% on that, or whatever minimum size what you consider. Okay, so that is one way. Second way is what we can do is, this is trial balance where you are trying to match the information provided by the bank in terms of your appointment letter saying, this is what my advances is, and also to identify how many number of types of advances. There will be two aspects out of this analysis. One, not only you are matching the advances. Second, if you see that your advances are hitting more on the agri side or agricultural side or more on the gold loan side, you can decide what kind of profile you are dealing with, and accordingly you can design your audit procedure. Say for example, if I'm dealing with something called gold loan, my bank where I'm seeing that majority of the loans are gold loans, so my audit strategy will be more on who are the empanel appraisers, and I might generate a report saying that appraiser wise generation report, where I'll get a report of loan sanction, I'll get a report of LTV. Okay, then I'll see what is the LTV, loan to value percentage a particular appraiser has applied. Say I'll take a classic example of one of the audits where we come across in Canara Bank, where there were 3 empaneled appraisers. So once I get the report appraiser wise loan sanction for under the gold loan, and apply a reverse percentage saying that LTV divided by the respective sanction, loan, what we call security value, then I'll see if it is consistently showing 85, 90, 80, 85, then obviously considering the present trend where gold ornaments are consists of more stones or more designs and all, obviously you can't hit a consistent percentage of 85% of LTV. Okay, so I might pick up a sample out of his saying that whether he's eliminating, excluding those stones in terms of calculating the LTV, or refer to the circular issued by the banker saying what actually is the percentage of depreciation what they consider while calculating the LTV kind of thing. Okay, So this is one way if I'm coming across gold loans more, or if I'm coming across agri loan or agri gold loan, my strategy might be different, saying that okay, agri loan, then I might have to get into the agri circular where I might say that okay, Patta passbook should be available, MRO certificate or VRO certificate should be available, there should be a physical verification by the branch manager, all these aspects. Now how I can decide how is based on this trial balance. By doing a profiling of the trial balance, I can accordingly design, okay, this is what the steps I should be following. Okay, this is one way where we have identified the trial balance, identified the advances, then we have done sample. Now what we do is we'll take up the major area of that is the term loans and the CCOD files. Okay, let me just quickly import those respective, and I've also placed those two files in the folder which I've shared. One is the CCOD file. As you can see, CCOD file is delimited with a special character, and I've also placed the loan balancing file, that is the term loan file, where you can see that this is fixed rate. Okay, we'll see both. Quickly we'll try to import, thereby we'll also work out on the analysis in terms of stratification. So let me take one empty file which I've placed in your folder so that the end result also you can get an access. Okay, so first thing, let's try to import the CCOD. Let me rename the sheet as CCOD file. Okay, let's start importing. So let me open the CCOD file. Yeah, this is the file. So as usual, the steps what we have followed: Control A, Control C, copy that, paste it into your A1 cell. Okay, now fortunately, this being a delimited, I don't need to worry about any other things except for the special character, the delimiter. Let me maximize the screen. Okay, now my partition or so-called demarcation of the data will be based on this delimiter, a special character used by SBI mostly. Okay, so what I'll do is I'll apply the same text to column, but this time instead of fixed to weight, I can follow this delimiter, which is the one special character. And for youngsters, if you are trying to understand what this special character represent, let me just also throw up saying that okay, this is the special character. Let me copy this. I want to identify what is this special character is about. I can use this function called code. There is a function called code. Let's not get into more technicality, but just to brief, as you know, ASCII code contains of those 255 characters, and all your machine, I mean the language, the way it communicates using these ASCII codes. And ASCII code again is a combination of so-called Unicode, that is defined special reserved characters where you can type in Tamil, Sanskrit, Telugu, or whatever. Okay, let's not get technical. So I just want to identify what code this pertains to. It says 124 is the code what this particular special character represents. So I can use find replace this particular code in terms of other reports, but in this case we are just using delimiter to copy the same. So what I do is I'll just copy the delimiter, extract the text to columns, saying delimiter next. So this is where I'll be pasting the special character which I've copied. Okay, and based on that I want to put a partition. Now once I say next or finish, you can see that the entire data has been separated accordingly by using the delimiter. Okay, thereby you can extract the entire CCOD report into the format what we are looking for. Okay, so while doing that, again the second challenge is I want to refine that so that I don't have this junk data in between all the headers and footers. I just want to have a refined kind of data. So again, following the same steps, let me just remove whatever is not required. And always whenever you are trying to import the data from various sources, ensure that your labels, the respective column labels, are always on the top, for a reason that whenever you are applying a filter, you can select my data has headers, so that whenever you are applying the filter, that will be useful. Second thing, it also helps you refine the data in a much better way. Okay, so the same steps, if you remember in the beginning of the session what we have done, placing my cursor in A1, Control Shift End, then I said Control Shift L. While applying the filter, as you can see, this data being in a number format, all the numbers will be on the top, the rest of the values which be in the bottom. Okay, I can just select those whichever is not required, thereby it displays all the headers and footers which I don't want to have. I can get rid of. So placing my cursor over here, Control Shift End, control minus, and then I get rid of that entire junk. Once I remove the filter, I get to see the entire data properly refined, thereby getting all the information in a proper format. Okay, so this is with regard to the CCOD file, where I believe we all know what it contains. This is also covered in the engagement letter saying that this is the minimum field, where it speaks about the new IR classification and old IR classification. If any rescheduling has happened, or any difference in terms of EMIs has been rescheduled, considering the moratorium circular, whatever it is, everything will be displayed over here. We'll see what kind of analysis we'll make, and we'll quickly also import the term loan as well, which is again fixed width. So let me open the term loan file, which is also shared in the same folder. This is file number 16 in the folder which I have shared with you. So again, just copy, Control C, come back to your Excel, paste it over there. Now in this case, it's not delimited, but it is fixed width. As you can easily see that you don't have any special character delimiting, but otherwise it's more of because obviously this is being generated from the report server. So what I'll do is I'll apply a fixed width kind of thing. And if you remember in the beginning of the session, I was saying when it comes to fixed width, you either follow the kind of data type what you're dealing with, or you follow the headers as per your convenience. Now in this case, as we have seen, these numbers are right aligned. Okay, even otherwise you can follow the labels. You can see that these are right aligned. In the sense, it means that the data whatever they have captured, this is actually defined as a number field while creating that particular field. Okay, so I can comfortably place my cursor at the end of the number. So this is where I put the partition, because fixed width where you manually intervene and try to put the partition. Okay, then I can go with the respective tag of customer number, and here being a number, again I'll place it exactly at the end of that, right align, follow that. And when it comes to these kind of typical cases, okay, where you can see the customer name, you don't know which part to which extent it has exceeded, it has gone, or from where it has started. That's where you can use the length function which I have defined, saying that okay, length of customer name, if I find the customer name, the location of the customer name by using find function, and then see from there onwards how many number of characters. Okay, usually just to give clarification, roughly around 35 is the default length what Pinnacle, unless someone want to customize. By default it will be 35 bit. So let's take up the same, saying that okay, from here if I add 35, that works out to roughly around 90 or so. Okay, so then I'll place the cursor following the same. Again, you have this number, right align, place it exactly at the end, follow the same. Rate is also number, place it exactly at the end, then follow the same with this. Okay, here automatically it has taken care. Then I'll quickly finish through various things. As we all know, date is also a number because it's just a serial number which started generated from 1st of January 1900, the date field. Okay, then again go with the rest of the field, here over here, year one, and just quickly run through other aspects. Why I'm doing this is for a purpose, because once I have CCOD and term loan both files together, I can do a typical kind of stratification, which not only helps us to the sample, but it throws up certain surprises. I'll just explain shortly, and then quickly do this for other fields as well. Then you have stress whether yes or no, then the date, then write off flag whether yes or no, and then the write off amount if any, and the write off date. Fine. Now it's only that if in case you want to retain certain characters, saying that okay, this has to be text or so and so, but anyway these numbers have been captured as a number, so I don't need to worry about converting something into text. I can just go with the flow. I'll say finish. So what we see is the data is refined. I'll just auto align the entire data. Okay, now we have the respective data segregated into each of the column. Now the top priority is to see that your column labels will be on the top. So I don't need require the top headings, because anyway file name I'll be naming with the branch name or whatever. Then repeat the same step, placing your cursor on the topmost, say Control Shift End, Control Shift L, apply a filter, take out the no column which is more comfortable. As I was saying earlier, if I have a date column, I can take up the date column, because the advantage of date column is it will auto group. Just to display here, as you can see, if I put a drop down, you can see that the dates are auto grouped year wise. 2021, within that again you have months. Okay, so if there is a date field, nothing like that. I can just choose the date field so that it will be easy for me to get rid of the junk comfortably compared to any other column. Okay, as you can see, dates have already been grouped. I'll just check which is not required. I'll say okay. Now whatever is being displayed is junk, including these subtotals we don't require, because Excel is anyway having capability of getting the subtotal of whatever. So I'll just place my cursor over here, Control Shift and Control minus, get rid of the data, and what you have is entire data properly segregated, properly sorted down, and also you have the respective dates. Okay, now we'll call it as term loan, TL whatever. Now once we have these two files, one important step what we have to follow is, we know that across all the banks after I think 2014, when bank RBI has initiated this KYC audit, ensuring that each customer should have only one unique CIF, that is the customer ID, and you should not have duplicate based on the number of accounts what he has. So fortunately what we have as of now is, no matter what number of facilities a customer has, CIF or the customer ID is the unique one. Okay, so I'll take up that particular customer ID and check if the CCOD, a customer has availed the CCOD and either the CC facility or the OD facility, or he has also availed the term loan, and check certain aspects. I'm taking you to another file which is also placed in the same folder. Okay, now here first stratification what I do is, out of that particular file, whatever files we have, let's say this CCOD account is there and the term loan, I paste these one below other. As you can see, the description what they have is the same. If you don't have, you need to ensure that both are of following the same respective column heading. I know a simple technique of copy pasting the headings, and let's see that each item is lined up one below other in a proper form. Or you can extract only those relevant, say account number, account type, customer name, customer number, the limit or whatever outstanding and all. Once you have those respective columns one below other, you then run a particular pivot. That is one way. Or if you have only those relevant columns, you can append these tables one below other, then again create a pivot out of it. Okay, now this is the file where I combined both the files one below other, ensuring that the respective column headings is one below other, whether it is CC or term loan. Okay, then I've created a pivot out of the given table. Now how do you create pivot? Obviously you just insert on the given table and you create a pivot table on the selected data. Okay, let me just check which from where this source is coming. This is picked up from a particular table called main. So this is the table where I combined both the term loan and the CCOD. Okay, now on this I'll insert a pivot so that I've created this particular pivot. Now here I'll group based on the outstanding, net outstanding for each, the CCOD and the term loan, and of course I have the count of each of that particular account. Okay, let's not get technical again into the pivot. As I said, all these videos are anyway there in the given link, because if I get into the functions and tools, it might take even more time. Okay, now once I have that, I'll take up the customer ID, which is obviously the unique value of each of the customer. Now by sorting, by picking up a pivot based on a customer ID and grouping it as per NPA or as per the respective standard asset, because if you go to the main item, this is again looked up based on the SA1, SA2, I mean SMA1, SMA2, SMA3 reports what bank has shared. Okay, now in this case, once I run a pivot based on that particular group, I get to see what are the customer IDs which are there in the NPA list, that is the respective NPA SMA 1 or 2, or those which are there in standard asset, classified as standard assets. So I can see that there are certain accounts which are classified as NPA, maybe from CCOD or from term loan, or because if you double click, you can extract that anyway. or certain accounts which are there in standard assets as well. As we all know, if a customer account has been classified as NPA, all those relations, all those facilities what customer has ever also to be tagged as an NPA. This is the standard. Now, banker might say that, okay, there is a zero balance, so I should not be bothered about, but that's not what we are speaking about. It's about the control what we are speaking about. It's not about zero balance or not. The same, it has to be tagged as an NPA when other accounts have been classified as NPA. Now, in this case, as I can see, couple of customer IDs, they are under NPA group. And other thing, there are two more accounts which are standardized, considered as SA, and that is where I should be commenting on the control aspect in terms of what Premnath sir has mentioned. Not only that, again, I might have to do a scrutiny saying that, okay, this is zeroized exactly in the month of March, or due to some other kind of maybe TOD sanction and try to zeroize the particular account for whatever reason. So this is one way of stratification, okay, based on the term loan and CCOD file which you have extracted. Now going back to the next way, we already know that we have groups of dates, each of the sanction date. Okay, once we have the sanction date in the pivot, I'll do only based on the sanction date. I'll get the date, a particular pivot based on the date. Okay, as you know, once you click a date, it will group into the years, months, and all. I'll filter only the years. Now, what is this helpful is, once I see that, I get to see what kind of trend the bank is following in terms of sanctioning loan, and is that trend has anything to do in the year for which I'm doing an audit. If I see that there is a huge growth suddenly in my year, I might have to be little cautious. I might have to inquire whether any MELA has been conducted or any scheme has been declared, or what is the reason behind that. Okay, or this particular impact is anything to link up with the changeover in the respective branch manager or whatever. So I need to get into those details, and this will help us to identify what is the trend for each year, what is the loan amount outstanding for each of the year, and thereby I can design. I might have to go for little briefing, profiling of the given branch. Okay, this is another which extracted from the same table. Now the third one is more interesting, because we all know that when we create a pivot, let me just do that directly over here so that you can understand how we can do this. I'm going to create one more pivot out of it, and I'll create in a new sheet. So let's say I want to have, based on the outstanding, net outstanding, I'm going to take net outstanding, and same net outstanding I want to have the row labels, and within that, let's say let me just check what was the stratification I've used. Yes, number of accounts. Okay, so I'll take probably any account. I'll just get the count of those accounts kind of thing. Okay, now here you might say, okay, when we dragged up on net outstanding, it is speaking about balances 1, 2, 3 rupees, 4 and all. Fine, but the advantage is once we have a pivot, I can group it, saying that, okay, I want to start from 0 and I want to end at maybe the highest amount possible. Then I want to sort it based on 25 lakhs slabs or whatever. So once I do that, okay, I'm just giving an example of grouping of, just to repeat, this is the net outstanding out of the CCOD term loan, CCOD and the term loan which we have consolidated. There, based on a net outstanding, I'm creating a pivot, understanding what is the majority. Of course, I've given a highest, let me just reduce this by 10 so that we can have more slabs. Okay, now we can see that the number of loans which are falling between, which are less than 25 lakhs are around 5,245, which are falling between 25 to 50 lakhs are 68. Now you can decide which part you should be picking up. Like in this case, if I have a slab of 50 to 75 lakhs, 23, and I'm going for a 10% sample, so at least 3 to 4 files I shall be picking up from this, or from this, or from this. So you can decide upon what is the ticket size, or what is the loan size you should consider for sampling. That one. Second thing, again, when we pick up these numbers, depending on the profile what branch is looking for. Say for example, a branch I was mentioning, if it is a gold loan, or if it is any kind of regular agri loans kind of thing, then these numbers being more in those terms, or you might come across those Rozgar Yojana accounts as well. I might go into the documentation part because the numbers are more. It's not about the controls in the system what I should be concentrating. I'll be looking into more of documentation part because as we all know, being if the numbers are more in terms of any particular loan type, it becomes so easy in terms of as one of the report what Premnath sir has also mentioned displayed on the screen saying that application forms are not properly filled or so and so signatures not attested. As the numbers go, it becomes so easy on the I mean bank staff might take it so easy in terms of documentation, and that could be one point which I might have to comment on the control part. Okay, so I take up those numbers and identify what are the number loan types what it is taking out. Let me just check whether we have class over here, and let's take as a column heading. Okay, class 1, class 2, class 3. Of course, this is coding based on the SA1, SA2, SA3. So I'm just giving, I mean, if you can group it based on the loan type, then you might say, okay, if the loan type is agri loan and the numbers are high, I might go into documentation part. Or if I'm saying that the ticket size of is high in one particular loan classification, I might check into the system part. So this way, stratification is one such tool which will help you identify what is the procedure you have to follow in terms of document verification or in terms of system scrutiny, whatever it is. So this is another third type of stratification what you can think of. Now I have as you can see in this particular example, I picked up those 14 accounts which are falling 21% of the outstanding, which is a high considering the number of low number but the high number of outstanding. So I might prefer this. I might double click this and extract that particular account where I'll check the transactions of those. Okay, so this is one way of stratification. Likewise, rate wise, as you can see, if I'm saying that a particular loan product code, I'm seeing different interest rates and apply saying that okay, this particular interest of the given classification, there are two type of interest rates. One is 13.5, another one is 18.5 for the same product. Okay, then I might check a spread between these two. There is a difference between these two, and if it is high, the difference is high, that I might consider that product. Okay, as just to go take up this example, let me check from where it is picking up. It is picking up the same main file. Let's go to the same file and understand what I'm trying to say. So if I apply a filter and check up the rate column, and so many fields, so let me just okay. Anyway, so when we check up the rate column, and I'm saying that for a given product, say for 101, the rate is falling under some kind of, let me just identify that. Yeah, I think this is where. Now, if you see for a given product of 101, okay, there is separate rates falling from 13.5 to 18.25. So what we have done this in this particular stratification is I picked up the loan type and identify what is the lowest of the rate and what is the highest of the rate. Similarly, if I select another product, say maybe 201, and check that in the given rate, there are, of course, this is savings account. I believe. So let's check probably a couple of. So in this case, if I'm seeing that for a given product, there is a change in the rate, and that change is not a normal or minor change, the spread is high, I might have to pick up this. In this case, if you see, there is no rate, interest rate for a couple of accounts, that is 0, minimum being 0, and there is an 18.5. The reason, if I have to inquire why the rate itself is not fixed in this particular account, something like that. Okay, so I'm just giving an idea. So this is one way of again stratification, which is again extracted from the same CCOD term loan which we have converted from the text to the Excel. Then on that I'm running a pivot and thereby getting the spread of this. Okay, So likewise, the advantage of extracting the data into the Excel is if I have the data in one form, in one particular file, I can do all these analysis and doesn't require any coding and all. You just need to use the pivot. And if you have any team, any person in the team who is good with the pivot and all, I think that should solve majority of the problem, because you can do various kind of pivots and identify what is the variation in the rate, what is the variation in the outstanding, or what is the variation year-wise kind of things. Okay. Now that is one way. And the fourth one, which we have already seen in the example here, where I've called up the code wise. Okay, so code 1, 2, 3, 4 is nothing but your SMA 0, SMA 1, SMA 2, SMA 3. And the fifth kind of stratification is this. This is also very important. So just to display, what we have done is, in this case, the same pivot from the main table, we had a class which speaks about whether it is SMA 1, 0, 1, 2, 3, depending on the percentage of whether it is outstanding for more than 90 days or so and so, no, less than 12 months or 12 to 36 months, so and so, so and so. Based on that, we called up the outstanding. Okay. Now this is the same class, both are same. It's only that I've grouped in terms of 1, 2, 3, 4. If I right click and check on the group, it is classified as 1 to 4 with an increment of 1 each, so that I can have a proper group. Within that, again, the same group is again called up, which is also having this 1, 2, 3, 4. Now we have these norms defined by RBI circular saying that if it is substandard asset, there should be a minimum provision of 15%. And if it is there is an unsecured portion, there should be a minimum provision of 25%. So as in case of doubtful assets as well, up to 1 year we have 25% provision, and 1 to 3 years we have 40% provision, and those which are greater than 3 years, obviously you have to put 100% provision on the unsecured portion. This is what the norm. So what we can do is, on the same file where we have extracted, and this is the outstanding field which is there from the file which you have converted the CCOD in the term loan. Once I have that outstanding, and this is the provision what banker has provided. Okay, let me just move that sheet so that I can simultaneously show the comparison to you. Okay, now you have an outstanding amount field over here, net outstanding, and this is the security as per this. These are all reports which are generated from the same CCOD and term loan which we have converted into the Excel. Okay, now there is a net outstanding, there is a security, and there is a total security, unsecured amount, and obviously based on that, banker has created a provision as on the date of our audit, okay, or as on the date of 31st March. Now, out of the same fields what banker has provided, I am creating a pivot where I called up the outstanding, I called it the provision, I've called up the secured or if any government security is there, okay, and the unsecured portion. All these put together, it matches with the total outstanding. Okay. Now what we do, we apply the same norms what RBI has provided. We have those, for those falling under 2 category, you have 15% to be provided on the secured portion, unsecured portion you have 25%. Those which are falling into this 3 category, you have this that is 1 to 3 years, up to 1 year, you have 25% on the secured portion, and so and so. If it is beyond 3 years, then you have 100% on the secured portion. Unsecured, anyway, we are going to provide 100% if it is, once it is classified as anything about SMA 0, 1 or 2 or whatever. Okay, now what we have done is the same percentage I've just copied from the circular, and we have applied this percentage on the secured portion. It has to be 15%, unsecured portion 25% in case of category 2. Same in case of the other categories, where on the secured portion it is 25%, that is up to 1 year, then 100% on the unsecured portion. Similarly, so practically we are applying the provisions as per the norms. Instead of depending totally on the system generated, I'm also cross-verifying on the data provided by the banker by applying the same norms in terms of provision creation. Now once we have that, I can just cross-check this entire total. I can cross-check this entire total. 1 second, let me move this, go to webinar. Yeah. Now if I total these, it works out to 16 crores 17 lakhs, or let me just say alt equal to, it says 16 crores 70 lakh 93, and if I check the provision created by the system, it is also matching as 16 17 93. See, we are not totally depending on the system. You might say, okay, it might be perfect on given day, but if it is not so, then that's where it's two aspects. One, the provision is being wrongly created, though it enables you to create an MOC. And the second, that provision, if it is so drastic, I mean, this difference is so drastic, then I might have to bring in the picture of control as well. Okay, just to repeat, see, I'm not getting into practically creating a pivot, then trying to group it and all, because that way I will be delaying because other term loan also to be covered. But just to give an idea, the file what I've used is this main file. This file is an aggregate of your CCOD and the term loan. Once we place it one below other or aggregate, I'll get to see each customer CF wise, what is the loan amount, what is the security, what is the provision, what system has created. Now, out of that, I've created this pivot wherein I'm grouping it based on the class. Class is available in your this particular report itself, class details as well. Otherwise, also you can do a VLOOKUP from the SMA 0, 1, 2, 3 files what banker has generated, because you'll have a common either account number or a customer ID. So it's not a big task to do a VLOOKUP from the respective files to the CCOD and the term loan. Once I have that, I'll get to see for each account what is the class it is falling in. Once I have that class, as I create a pivot of the each class, okay, so because if I'm not having this group, okay, let me just move this aside and say if I don't group, what is that it does? Let me just remove the group. Okay, because this picture is there, 1 second. Okay, so it's auto grouping anyway, because class is again part of this thing, so nothing to do grouping and all, automatically it is being. Otherwise, if you don't have subclass also, because we have these classes, thereby we can yeah, just undo so that we'll get back the picture. Yeah. So what we once we have this particular grouping and all, I've done this secured. This part manually we are entering based on the norms what RBI has provided, saying that no, for the which are classified as doubtful, that is up to 1 year, I have to provide this kind of security and on the secured portion or provision on the secured portion or the unsecured portion. Now, once I have that, I'll apply the same percentages on the outstanding amounts. Okay. Then once I create that, I cross check the total what I got the provision, which is matching with the provision. So you are cross checking the system calculation, also ensuring that it is following the norms provided. So we have done so far 5 different kind of stratification. One, where we have checked upon those common accounts where CAF is their customer account is there in both in NPA and also standard assets, which speaks about the control thing. Second, we have done the year-wise grouping so that I can identify what is the number of outstanding for each of the year, so that if I have to do something with regard to the audit period or the branch profiling. Third part we have done where we have grouped the outstanding based on certain slabs 0 to 25 lakhs and identified what are the top 3 which have to do system scrutiny, and what are those numbers which are low in terms of outstanding where I have to do document scrutiny. That is the third type. Fourth type, we have classified based on the rates where we set the minimum rate and maximum rate, and the spread, if it is more than, it's difference is so high, then I might sample those high spread accounts to see the reason behind why the same product is carrying the lowest interest rate, and why there is a variation between the interest rates for the same product. That is the fourth type. And the fifth type is we have classified based on the outstanding to check whether the provision has been created properly on the secured and unsecured portion. Okay, so these are the various kind of stratifications what you can do based on the same CCOD in the term loan which you have extracted. Okay, now let's move on to another important area which is also little technical, but let me try to simplify. As I said, again, anytime you can visit the videos which has detailed about that. Now, before I take you to that, let me show one particular file. Interestingly, a couple of banks, when we said that, okay, we want the data provided to us to do audit, interestingly, a couple of banks, they started providing in Excel rather than RPT or text file. But the problem here is it looks even more worse compared to the text file, because at least in text file I can follow delimiter or a fixed width to extract. But given these kind of files, it becomes so tough for us to refine the data, because as you can see, it has completely scattered across, and it becomes so difficult to us to identify, to get the transactions in a proper form. So here I can simply use a technique of using if function, and last year also we displayed this demo. So what I'll do is I'll identify those important fields out of the bank, so that I use the same field to tag each of the transaction. By tagging, I'm grouping the data for applying any filter. Okay, I might sound technical. Let me just do practically, then explain what I was trying to do. Okay, let's say I want to have a chart of the account for each of the transaction, and I want to have the account number, and I want to have the customer name, and also I want to have maybe customer ID. Okay, now once I have this, what I'm trying to do is, first thing, I have to refine the data in a way that it looks something like this, where I can get each transaction date, all the respective transactions, including the reference, debit, credit, and all. Okay, so that I can do analysis on the file. So to do that, I'll follow a simple if technique, if function, where all the headings being captured in column E and all the relevant values captured in column G, I'll try to make use of those position values. Okay, so what I'll do is I'll use a function saying that, okay, if this particular heading is equal to the given heading, okay, I might use a shortcut, because as you can see, just because I'm displaying this, while I'm referring this, the formula where I'm entering is somewhere else. If I have to go back to that active cell, there is a shortcut called control backspace. So once I use control backspace, I'll come back to that cell where I'm trying to enter the formula. Now what I'll do is I'll freeze this. The logic what I'm using is, wherever I have in the column E, wherever I come across a term called chart of accounts, then please provide the data which is there in the column G for the relevant row. If not, take the value from the above cell. Okay, so what it is doing is, wherever there is chart of accounts, it is matching with this particular heading, it is getting the relevant data which is there in column G. Otherwise, it will copy the one which is above. That means if I drag this below, it is going to capture this cell value, because the next cell value is no more carrying the chart of accounts. Okay, this particular heading is no more matching with the chart of accounts. Okay, so thereby this being not matching, instead of calling this value, it will call the value which is above. So it is going to copy the same. The same aspect I'll do with the other things. I'm going to say if this is equal to account number, freeze it, then pick up the relevant value, otherwise pick up the above value. Do the same with other thing as a customer ID. If this is equal to what was that we are using, customer name. Okay, so if this is equal to customer name, freeze it, then get the relevant value. If not, pick up the above value. Let me cross check whether I've freezed. Yes, and do the same with the customer ID. I'm saying if this is equal to customer ID, then get me the value of customer ID, otherwise pick up the value from the above. Now by doing this, wherever it is having that, it will copy. Otherwise, I'll copy the above value. I'll just drag it across. How I can do it? I can say Control C, Control End, that is the last part of the table, Control Shift up, so that I can paste it across. So what we have done is, I'll just, wherever that particular account is there, it has copied the value. Otherwise, it has repeated the above value, and thereby it has tagged the entire transaction. So once we have a different name, immediately it will change over to the next name. Let me check we have come across any other data. Yeah, in this case, second. Let me cross check. let's freeze column E. In fact, I freezed both the row also. It should have been column E, because only column E has to change, not the row number. Okay, let's copy this. Control and paste it across. Okay. So by doing that, whenever there is a change, it will change the name accordingly. And once we have that, I can just apply a filter over here. And as I was mentioning earlier, whenever we have a date, that is the best way to filter out the irrelevant data. So I'll apply the filter over here. As you can see, it has already grouped based on the year. I'll untick the dates to display only the junk value. Control Shift End, Control minus. So what you get to see is, of course, this is not required because I believe I forgot to paste special. Let me copy and paste special so that I will not lose this. Control C and paste special. Now let's apply a filter over here on the date column where I untick the dates and display only the junk. Control minus, get rid of the date. Now we have a proper transactions lined up across. Okay, so something like this where we have. So I've just used the same file, saying that once we have that refined the data in a proper format, the next thing is we'll identify what is the debits, what are the credits. As you know, in a term loan, at the most, it will be having 4 different classifications. One, there is a disbursement. Second, there is a repayment of the principal. Third, there is an interest debit, and any other payments other than that will be penal charges or other charges. So I can just apply a filter and group it accordingly. Okay, so what I'll do is I'll take you to the final file where we made the analysis. Why we are doing this analysis is, we all know that of course people might members might feel comfortable saying that okay, from June onwards we have this daily NPA reporting, so I may need to worry about little less about that area, saying that okay, NPA. But friends, we need to understand that when it is in daily NPA or no matter whatever report, ultimately whether branch has controls on the any particular field, or is it that entire control is there with the zonal or the regional or any other head office. If I say that okay, if you put this question saying that out of the customer loan accounts or out of the customer accounting field, what are those fields branch has a control? Okay, while creation, okay, that's not a problem. Bank has a control in terms of creating the KYC details, updating the KYC details and all. But post creation, if I have to modify, what are those fields? As we all know, when it comes to interest, it comes as a patch from the head office or any regional office in terms of updation. But when it comes to the interest rate, the EMI period or the date of sanction, because there is always a chance of rescheduling or there is a chance of applying a moratorium on any field. So branch still has the control in terms of saying that okay, this sanction date, rescheduling date is so and so, or the the number of periods, EMI period is so and so. Now, as long as those two fields are still accessible at the branch level, I'm still may not be so comfortable dealing with the daily NPA report. No matter how the NPA report is being generated on automation basis, still I'll not be comfortable for the reason that those two fields are sufficient for me to see that no certain things doesn't fall into the respective classification. I'll show you one more file why I'm saying that. Now, once have this, what we are doing is we are doing our own analysis. Okay, I've just placed one more file also in the same folder where it is called term loan file analysis solved. The file name is solved in the same folder. Now, if you visit that particular folder, this is the refined statement what we have dealt with. Okay, then obviously all these term loan we would have asked for a loan balancing file, so-called the master file, where it speaks about what is the loan amount and what is the term law, what is the date of sanction, for how many number of EMIs the loan has been sanctioned, what is the period for which it has been sanctioned, all that stuff. Okay, now on this I'll apply a couple of financial functions using an Excel. Okay, up to here this is the details provided by the banker. And of course, the report may not be in the same kind of format. It's only that I'll be extracting only the relevant columns out of the table, and I've placed what is important for me to do the analysis. So as I said, loan is important, the disbursement date, the number of EMIs, and what is the EMI amount. Okay, all these are the important fields. So those fields we have extracted from the term loan account and placed it over here. On that, we are doing a couple of analysis. One, if it is sanctioned on this particular date, and I'm saying the period is 97, obviously I need to arrive at what is the last date of the EMI. So for that, I can use this EDATE function. EDATE function is where you get an exact date from the given date, how many number of months. Okay, so I'm saying from the given date onwards, after 97 months, what will be the last date of EMI. Why we are doing this? To ensure that this is not below the date. I mean, of course, if I'm auditing on this particular period, and if I say that the outstanding is 30 months, considering the 30 months, that should be within the period for which I'm auditing. It should not go beyond. Okay, that is one reason. So we have identified what is the last date of the EMI. That is one. Second, we unfortunately, couple of reports doesn't speak fully about a particular loan. Like as I said, if I'm speaking about the rate might be displayed in term loan, but the term loan may not speak about the EMI. It might speak about the number of EMIs. It might speak about the loan amount, outstanding, the EMI periods, but may not speak about the EMI amount. Or if there is a report which speaks about the EMI amount, it may not have the other fields. So I need to see that all the calculations are at one place. So one, the system generated report I can club using the Vlookup anyway. But if I cross check saying that, okay, for the given loan, for the given EMI, for the given period, what actually the interest rate bank has applied. So I can use this rate function. Okay, again, not to get into technicality of these rate functions, again, just to repeat, all these videos are already placed in the folder. You just need to click that hyperlink, which speaks about each of these functions. So if I'm applying a rate field on these particular columns, I get to see saying that, okay, for this loan, the loan rate applied is 12%, or for this, it is working as 11. Somewhere it works out to be 4% for some reason. Okay, that where we have to inquire about 13%. So there is various rates, just like the way we have done the stratification earlier. I might be worried for the same product, whether the rates are different or whether all these are different kind of products. Okay, so this particular column will help us to identify based on the information provided by the bank, what is the rate applied. This you can cross check with the rate provided by the banker. Now, again, you have a couple of data functions like data diff and all. Again, this been mentioned in the same folder. You can just go to that. Data diff will identify how many number of months difference between two dates. So I'm saying from the loan sanction date as on the date of audit, how many months it has passed. Okay, so if 48 months EMI has been paid out of the loan period, how many still are due? That is a normal differentiation you can make. Now, if that is so, what is the total interest he would have paid as on the date of audit? What is the principal he would have paid by using these two functions called CUM IPMT and CUM PRINSC? These two functions will be available, helpful for you. And this again being captured in the same videos which I have placed. Now what it does is cumulative IPMT, it identify what is the total interest he has paid as on the date of audit. Date of audit, nothing but we have calculated already the number of EMIs, what it should have served. Then I'm saying the rate divided by 12, that is per month rate. Number of months, what the loan has been taken for. What is the EMI so far paid, and what using that formula, I'll get to see what is the total interest customer has paid, customer has to pay, so theoretically, and what is the total principal customer has to pay theoretically. Both put together, obviously, this is the what due amount. So theoretically, that's what the balance will be. Now this I can compare with the outstanding column which banker has provided in the term loan account. Okay, so these things, why it's not just saying that we are going to calculate on our own, we are doing a validation about the data provided by the banker. Okay, because as I said, always when I allow a couple of fields in the controller branch, there is always chance of a control lapse. And based on these reports, if there is a huge difference, that might go into your ICOFR. If it is a normal difference, I might see whether it is impacting my balance sheet in terms of MOC or whatever. Okay. Now, not that that's the only analysis what we can make out of this. There is another beautiful analysis. Okay, this is little more technical because I'll be using certain functions called SumIfS, COUNTIfS, and all. Which again you can revisit the same video again and again. So in this case, I'm just identifying. Say for example, if I take up this first loan account, it says that there is a loan given for 36 months. Okay, and the date of sanction is 2017. So I might find that, okay, this is the last date of EMI is falling into my audit period considering the last year 2021. So accordingly, I might drag saying that, okay, if the given loan account, if I have to serve for 36 months, what should have been the theoretical pay considering the EMI? Okay, as we accumulate each of those, and we have already consolidated various statements of the customer right from the beginning by using this Excel tool. So from that, I'll also identify what are the other charges. As I said, these are the couple of SumIfS and COUNTIfS functions saying that, okay, wherever there is a description of other charges, then if it is less than a particular date, you add up all those. So I'm going to get the other charges being added up as on the date of this particular, and what is the amount he has repaid based on the narration what we have captured. Okay, in this case, we said if I apply a filter, we said that, okay, these are the amounts which are repaid because it is showing a credit of those. Okay, based on the classification or the description. Coming back over here, we have consolidated using SumIfS. Okay, just go through this particular file. If you revisit the SumIfS function or the Vlookup function, you can easily make out what are the purpose of this. Okay, now once I have that, it's a simple formula saying that anytime theoretical pay, considering the total what he has paid during the last 3 months, if I divide it by 3, it should be exactly 0 or anything falling beyond that. That means it has not served the last 3 months of repayment. Okay, so thereby I'm classifying saying that the payments whatever he has made as on the date, if it is greater than a product of 3, then I'll classify it as NPA. Otherwise, I'll just leave it as blank. So in this case, if I revisit this case, he has repaid only 1500 so far as on 31st of July, whereas the payment he should have made is 1,71,000, and because the sum of the particular amounts after the repayment is greater than 3, the product of 3, I'm classifying it as NPA. Okay, and again, based on this, if it is continuously for 12 months, I might classify it as doubtful asset. So I'm saying the count of NPAs is greater than 12, then I'll classify it as doubtful asset 1. Or if it is beyond 24, I'll classify it as doubtful asset 2. Or if it is going beyond 36, I might recommend to be a loss asset. Again, as I said, loss asset, it's a discretion of the brancher because he has to consider the collateral security or the security what he has got. Because based on that only he can take call whether it has to be classified as loss asset or not. But at least I'm running this table directly from the customer statement, not depending on any other report generated by the bank. That's the advantage of doing this analysis. Just revisit this particular file. If you have any doubts, visit the video what we have done on the same aspect uploaded in the link during the last year. You can just use that. And also we have done a little bit identification where it should have been actually classified as substandard. Okay, if the count of NPAs anytime it is more than 1, anything about 0, that is 1 or so, then obviously it should have been classified as substandard. So I'm identifying for the given account which year actually it has turned out to be substandard. Thereby, I might be interested in saying that if it is not classified as substandard, it's not only reporting in the current year, I might also consider saying that this is being running through for the past years. So that might again speak about the control lapse. Okay, so this is one way of analysis where we are doing the analysis based on the term loan account of the individual customer, where we have brought down all those transactions at one place and doing analysis based on the EMI payment what he has made. And the second way of analysis is much more interesting. I'll display that. This is also placed in the file. The file name is a term loan EMI demo file. Okay, this is a file what we placed in the folder. Let me just check if I've placed. Yeah, term loan analyze is the file which I'm speaking about. So what this file is about is sorry, that's not the one. term loan demo file. Yes, exactly. Okay, term loan EMI demo. What if this is a file? What I'm speaking about. Now, this particular file, usually when we speak about calculation, this particular column is always confusing in the terms the EMI columns. What we have, one, it speaks about the total EMIs. The other column speaks about what is the total EMIs he has already paid. And the third one is about how many number of EMIs is still due. Okay, that's the report what it speaks about. But for some reason, if I apply a function called PMT, what PMT does is it will identify what is the constant payment or consistent payment for a given loan amount, given the number of year period, given the rate, what should have been the number of months where it has to be repaid. Okay, so that's what the PMT function is about. So I'm displaying this PMT function. The function syntax of PMT is the rate, comma, the period for which the loan has been sanctioned, and what is the loan amount sanctioned. Okay, so R7 is what it is referring to, this dummy period, and E7, if I go back to that E7, that is the loan amount. Okay, now before I take you to that, I'll explain one particular tool which is very handy, not only in this particular audit, also in tax audits and GST audit. Okay, that is called the goal seek. Okay, an extension of goal seek is another tool called solver. Okay, we'll not get into that solver add-in, but as of now, let's see what goal seek is about. I've taken a small example saying that for a given loan, banker has provided that there is a rate of 8.5% what he is charging, and the loan has been given for 24 months, and the loan amount is 7,50,000, and he says that he is charging 23,561. Now, as we know, once we have these three fields, I can calculate EMI by using a function called PMT. Okay, so what we have done is we have calculated a EMI, that is PMT, saying that okay, for the given rate, that is 8.5% per annum, that is converted into months because we have a period of months. For a given 24 months of tenure, for a given loan amount of 7,50,000, what should have been the EMI? And it says 34,091 is the EMI, but the banker EMI says 23,561. So obviously there is a difference. So I need to investigate or I need to verify what is the reason behind this difference. Either there is a change in the rate, or there is a change in the period, or there is a change in the loan amount. Okay, so that's where we are trying to use this goal seek for. Say for example, in this case, there is a difference of 10,530 between the loan EMI what we have calculated using PMT function and what banker has provided. Now, if I have to analyze, obviously this loan amount is too tough. It's not possible to change because once I've applied this, it has to be from the it has to from the outside the branch, that is from the regional level. If I have to modify that, unless I have support. So I can say that okay, loan amount is not the part of this thing. So what is left is either it could be change in the rate or change in the number of months. Okay. So let's say I want to identify what could be the difference. Let's say if I'm applying, check that whether there is a change in the rate. What I'll do is I'll place my cursor on the differential amount as per my EMI and the banker EMI, and I'll run a goal seek. I've also placed a screenshot of goal seek. What are the fields you have to select in the given file to practice. Okay. So I'm going to say goal seek is available under data tab, under forecast what if analysis. So under what if analysis, I'll select this goal seek. And what I'm doing is I'm trying to set this cell to 0, saying that okay, you change this cell to 0. Okay, by what? By changing any of these variables. Okay, now how it becomes 0? Obviously, this being a difference between my EMI and the banker's EMI, unless both are same, this will not turn out to be 0. Okay. And because I'm changing these variables are coming into this formula, not into this formula. Obviously, it will change the EMI formula by seeing that it modifies respective values. Okay. So I'm saying that, okay, let me change the months. So just to explain, what I'm saying is do a goal seek where you work out this particular field to be 0 by changing the number of months. So what Excel does is using permutation combination, it keeps changing that particular period in such a way that it will hit the formula in such a way that that becomes exactly 23,561, thereby it will zeroize. Okay, So it will work on that. I'll say okay. So it randomly works out saying that if it has to hit this 23,561, the number of EMIs should have been 36 months. Then only it will be possible to make it 0. Are you getting? Hope all of you are with me. So GoalSeek does the reverse calculation saying that if only the number of EMIs changes to 36, then only my EMI will become 23,561. Thereby the digit will become 0. So now I get to see that okay, the loan should have been 36 months. Then only it will become EMI to be 23,561. So my question to the banker will be whether this field is right or this field is right. If it says this field is right, then obviously the 36 months has been converted in 24 months. Thereby, even if I make one EMI payment, that might be adjusted to 1.5 months or even beyond. Okay, so again I speak about whether it is an error or any control lapse. Obviously, someone should be validating this, and that is where I get into picture of questioning this. Okay, so this you might question saying that okay, I might have hundreds of accounts. Do I have to do this for each of the account? It's not required, and that's where I also placed 2 macros into the folder. You can just see GoalSeek macro. Okay, you can open the text file where I've explained how this macro works and also pasted that. How you have to use that, I'll just show you a demo so that you can make use of that. Now let's say in the given term loan, it has captured, of course, for the confidentiality, I deleted the account number and all. What it has captured is what kind of loan amount it is, account type it is, what is the loan amount, what is the rate of interest, and obviously the rest of all theoretical balance, outstanding irregularity, EMI, so and so, so and so, so and so. Okay. Now in one column, let me just do the stepwise so that you can understand. In one column, I'm using a function called PMT. PMT is a function which will help you calculate the EMI technically. So I'm saying PMT, and as the syntax says, it says about rate. Rate is there available in this column, but as you see, it says 7, not 7%. So obviously we have to suffix with 7% so that it will convert into a percentage. And because we are speaking in terms of months, I'll divide it by 12 so that the rate will be per month. Second, for what period you are trying to calculate EMI? Because I don't want to depend on the EMI provided by the banker. I want to calculate my own EMI. So what we do is, before we proceed with the formula, I'll put a dummy value called 1, saying that if it is for 1 month, okay, and if it is for 1 month, if the rate is so and so percentage, and the loan amount, PV is nothing but present value, that is the loan amount. So I'm going to check the loan amount. This is the loan amount. Okay. So the formula here, what it speaks is, for a given rate of percentage, for the given number of period, that is EMIs, for the given loan, what should have been the EMI? Okay. So because we are calculating it dummy, let me just say prefix with minus so that we get a proper value of positive value of absolute value of so and so. Or we can use absolute function also here. Now what I'll do is I'll find the difference between the EMI calculated by me and the EMI provided by the banker. Okay, let me do the same across. So I'll just copy and paste it across all the rows. Now we'll try to use GoalSeek function over here. What is that we use? I want to do a GoalSeek on this, saying that this should become 0. That means unless this becomes 3,126, this will not become 0. How to make it 3,126? By changing this 1 to such number of EMIs so that this works out to be exact 3126. So I'm going to say what if analysis, GoalSeek. I'm saying set this difference, not this amount, this difference to 0 by changing this particular value. Okay, just to make you understand again, I'm calculated a PMT function to calculate the what is the EMI, and I found out the difference between my EMI and the EMI provided by the banker, and thereby I want to zeroize that difference in such a way that this also becomes 3,126. And how it will become 3,126? Because one of the value I refer to this column R, I'm asking Excel to do permutation combination in such a way that the one turns out to be that number where that can make 3126, thereby making it as reference to 0. I'll say okay. So it will do permutation, combination and all, and it says okay. If it is 182, then only it can be 3126, and thereby it can become 0. So by making goal seek, I understand that okay, unless this is EMIs is not 60, it should have been 182. Then that's where it will become to be 0, and that will help. The goal seek will help us identify that. Now, if you see, as on the date of audit, say 31st of March 2021, the number of EMIs, actually the sanction date being 2007. Of course, this being a dummy, probably I would have changed the date, but as an example, I'm saying as on 31st of March, if I'm using date diff, it says this particular account has already been existing for the last 159 months, but whereas the EMI is showing as 60, that means either it has gone past or some rescheduling has been done. So that way I can, by running a goal seek, just repeat again goal seek by saying that you turn out to be this 0 by changing this particular loan period. It says if only it is 182, then only it will be 3126. Then I can understand that okay, the loan is no more 60 months, it has been given for 182, and I'll have to check whether there is any kind of scheme applied, maybe S4A or any restructuring or any rescheduling has been done. Okay, now again the same question is, do I have to do this for again and again for each of the accounts? That's where it is not required. If you go to the macro, what I have shared in the folder, if you go to the goal seek macro, the only thing what you have to ensure is just check the columns where we are working the particular Vlookup, goal seek. Okay, now in this case there is a column Q which is a difference, column R is the one which has to change. So in the given macro, this should have been R. Okay, wantedly I've given this so that you can match with this. So here it will be R and R. So what you do is you just copy this, where you are going to paste under your Excel. You have this developer tab, okay, and you have this Visual Basic. Okay, so you can go to the Visual Basic and say insert module and paste the script what I provided, or otherwise if you see the same file what I've provided, you can just go to the macro and there is something called macro looping. You edit that, it has also copied the same which I've already pasted in the file which I've shared with you. So what this does is, first thing, whatever steps we have done, we have recorded a macro. That means I placed my cursor over here. While I run the what if goal seek, I first started recording macro, saying that okay, I want to record a macro, whatever name it may be. So then once it started recording the macro, I'm going to do data what if goal seek, saying that this should be 0 by changing this one. I'll say okay, and once it says this, I'll say okay, and I'll stop my recording. So that's the only macro what we have recorded. So once I place my cursor over here and try to run the macro what we have recorded, it will run the same macro okay, I think this is the file which okay, so that macro will keep running on this. So what we are doing is, instead of running that macro again and again, we are calling that particular macro called goal seek. Thereby for every item in R, it keeps repeating the same macro. Okay, so just to repeat, I'll place my cursor over here. I'll run this macro called macro looping. That's it. So it doesn't have to be goal seek every time. It keeps running till it goes to the end. I'll say end. So what it has done, it has called up that macro which we have recorded, that is goal seek, for each of the cells, so that you don't need to again and again run the goal seek. Thereby automatically it keeps running. Thereby you get to see that okay, this should have been 260 months, this should have been 18 months, this should have been 58 months, so and so, so and so, and then you can compare with the terms EMI, number of EMIs what bank has forwarded. So this again, as I repeat, the file is available in the folder. The relevant video link is there, 2 minutes of Excel or few minutes of audit. You can just revisit that, which has again elaboratively covered the way you have to record this macro or run the macro. Okay, because given the short period, obviously we can't repeat the demo. So I'm just hinting about what are the ways you can do the analysis. Okay, so this is about term loan file, and this again term loan solved file what we have dealt with. Let me just check if anything I missed out. We have also seen how we have to import a couple of things, and just to mention, in the given folder I've also provided the latest Pinnacle course which we have extracted during the last month audit concurrent audit. So you can just refer to this. More or less what is important is the way you print the file print and file tran and hprint. These are the two commands what you use by either you want to extract the relevant file. Most of the time banker will help you out, but otherwise if you have saying that you are provided with a system where you can extract those files, so usually you have two options, file tran and HPR. What file tran does is it will transfer to the respective local server where the respective report files would be pasted, where you can copy and extract using Excel. Hprint, what it does is it will display, it will capture in the screen itself all those reports what it has generated. So you have to go to that particular screen of HPR and double click each of the report what you have generated, so that again it will be showing as a text file. Then you save as into the respective folder and keep doing. Okay, so these are the two important way of extracting. And the rest of all, this is the latest menu, 10x menu, and this is the old menu of Pinnacle. So you can follow the 10x menu. You can just apply filter. Let's say if you are interested in report, you can just extract saying that which contains the report, and these are the commands which will help you extract the menus. I have also placed one interesting file shared by our beloved Kuntal Shaji, where he has also given what are the ways you can extract the given files, and also very interesting file he has covered in detail. So kindly visit this file as well, which speaks about the latest update and which will be very helpful for you all. And apart from that, as I said, these are the two links which will help you identify how to use this and all. And one more important thing is try keeping an eye on this particular folder. As I said, as we come across any development or through our own audit or through some knowledge sharing by any other peers or colleagues, we'll keep updating this particular folder. As I displayed earlier, this is the QR code where you can scan and access. Otherwise, also I believe I think SIRC has placed a link in the chat box also where you can access this particular folder. So you can just scan this code to access the respective files. Fine. So I think I'll stop the presentation. We have 10 minutes. So if anyone has any queries or any questions or anyone want to discuss, I'm open for the questions.
Many were like asking for the Excel file. So can you again share the barcode scanner, sir, so that they can download it? Yeah. Yes, sir. Thank you, sir.
Sure. Just need to scan with the QR code scan. I suggest you take a screenshot of it or a picture of it so that later you can scan it. And as I said, apart from the files what we have shared, just keep an eye. By the time you join with the audits and all, we might add a couple of more files. Yeah, this is where I've displayed the screen, and I think someone also shared
link also you have like shared.
Link also you have shared. Yeah, that's
yes. Yeah, shared the link, material link.
Yeah, sure. And please do visit anytime. See, when we speak about extraction and analytics, it speaks about more of especially if I'm using free tools of Excel. That is one. And another thing, before we conclude, let me also share one important area what you can make use. So important, especially in our bank audit. Okay. Hopefully the screen is visible to you.
So, yes, sir.
Yeah. See, friends, what you do is, let's say, for example, you have one license in your office, Microsoft Excel license, so you have only one license. And this is Office 365 version what I'm using now, and you feel like you want to use this Office 365 not only in your office, simultaneously by other also. So easy way of using this, or a better technique is, you just open up the file in your system where you have a license. Then what you do is, you go to this share button. You have on the top, you have an option of sharing. So what you do is you share it. Let me just use otherwise this option also. It has to be saved in the local drive. 1 second, let me just show this to you as well. Yeah, so you save the file in your local disk, okay, where you have a license. You click on a share and you share the file to someone who want to use, and it could be any mail ID, doesn't have to be Microsoft. Say for example, let me give demo of my own mail ID. I'm going to type my mail ID. I'm saying I'm sharing with the Gmail. I'll send it across. Okay, now let me go back to Gmail and let me refresh the data. So when we share these kind of files, either it might be coming in your inbox or sometimes it might go to the spam also. So kindly keep an eye on the spam also, because it's an external link what we have shared. So chances of file going to spam are also there. There's some lag in sharing. And this will be very, very handy, especially if you have limited license, but still you want to use all these commands no matter wherever you are. Okay, I got this file. For some reason net is struggling. Just let me wait for a couple of seconds. If it is not happening, I'll explain what is to be done. Okay, by the time it loads, what happens is once you share that, you will get a link in your email. Okay, now I got, okay, fine. So I'm going, this is the link, of course, obviously this being an external link, it is reporting, could be spam, or that sometimes it goes into the spam as well. So what you do is, this is the file which we have shared from the local disk where I have an official license. You just click on that. Now by doing this, though even if the other person doesn't have a license, the Excel Office 365 will open up in a browser what he is using. You just opt it for editing. Now once you save it as, use it as editing, that means he can use this file, whatever file you have shared, along with the latest Office 365 capabilities. All those functions what you have in Office 365, he also can use without having a license in his system by using a browser. And not only that, you can also keep interacting with each other in the same file. Let's say, for example, you are sitting in the office, you are reviewing this file. The other person sitting at the branch is also accessing this file. Let's say you have a comment here, please check this. You type in your browser, you come back to your Excel where I was giving in the demo. Okay, and this is where the client has typed. Okay, as you can see, it says, please check this. Where I've typed in the browser where I got this link. Now you can see it is highlighting where I am active, and in my file it is highlighting where the guest is active or the person who has access through Gmail is active. Now by using this, by using a single license, you can, multiple people can access the same file without issue. You can interact by using the audit, and also probably it will be more helpful at one time accessing both at the same file while having the capabilities of the latest Office 365 functions. If I have to demo, if I'm saying Vlookup, obviously there is the latest Office 365 which is still working in my browser as well. So it doesn't have to be that your system should be having a Microsoft licensed version if you are going for an audit. If you have one license at the office, you can follow this technique where you share the file through browser, let him open through the browser, and you keep interacting, let him do the audit, let him update. At one go, it is updating your file and also helping you to interact with each other. Okay, and anytime you have certain comments and all, you can copy, put a comment, you can review those comments at one place. Let's say if I'm adding one comment, have you verified the term loans. So if I'm placing this comment, obviously that will come into my system saying that someone has commented, and it will display, okay, yeah, he's put a question on this file saying that have you verified term loan. So it will be very interactive, in sync with the regular data, and also helps you use this without having license in all the systems. It is enough if you have one license at your office. That will help you through regular audits. Okay, this is one tip I thought of sharing, and with this, let me stop sharing, and unless you have some questions and all, otherwise
I'll share my screen from my end.
yeah.
Is my screen visible to you, sir?
Yeah, it is visible. Yeah. How to confirm or check end use of the funds? See, end use of the funds, there are the two places. Usually they have to capture in the system, but unfortunately it doesn't. It has to be through document only. Usually in the document they mention the purpose of the loan. You have a field, if you are fortunate enough while generating the Excel file, if it captures the end use, saying that usually end use, if I speak about agri loan, it says maybe Buffalo or some kind of what he's trying to purchase kind of thing. If they are capturing the system, that's fine, but otherwise if it is not, probably you can put a comment on that, and the only place it is available is the document. So if you have a sample saying that these are the fund loan accounts which I have to verify the end use, you sample those, ask for the documents, and try to check it through the documents. That's the best way, unless if they capture in the system. What is the amount limit for passing? There is no limit of MOC. See, again, as it's a materiality. Okay, obviously we don't bother about a small rounding of issues or something. But if such kind of issues are find that many accounts there are such kind of minor issues, then you might put it as a comment saying that okay, as a general comment kind of thing. But otherwise, there is no limit saying that for MOC it has to be. Again, the materiality is what it speaks about. In terms of provisioning is one, the classification is one. Okay, so again, it's an independent call what you can take. Otherwise, there is no limit saying that I should be passing MOC only this. Charges like insurance debited to loan account or show more than the balance should we consider as irregular. So those will be considered as other charges. Okay, so when it comes to the other charges, obviously that will not be part of theoretical balance. We'll speak about the principal amount and the interest amount what is outstanding as on the given date. So that's the reason if you see in the analysis files also, I've excluded those and only considered what is the interest and the principal repayable for the theoretical balance. Theoretical balance speaks about only the loan amount and the interest amount. How to extract the interest rate history for all the account for the full period in Pinnacle? There is a command for the interest rate history. Let me just check. Let me quickly say the shortcut. Otherwise, it's there in the menu. Yeah, ACCINT, or otherwise HACINT. Okay, these are the one which speaks about the interest run for the given account. It lasts for the period, so you need to mention 1st of April to 31st of March. You should be good enough to get the details of that. That's it. That's it, ma'am.
Yes, sir. These were the questions for the content. So others were asking for the presentation and for the videos, which will be like upload within a couple of days.
Yeah, sure. And as I said, kindly keep a watch on the folder where we are placed. As we keep going on, maybe till 2nd of April, we might place certain important other things which may come up. That's one. Second, I'll take this opportunity to request if any members from Hyderabad, as you all know, there's an election going on. So I request all of you to please go to the election center. There is time till 6:30, and please give your valuable vote. That's the only way we can show gratitude to our branch activities. That's the two statements what I want to give you. And that's it from my side. I would like to thank SIRC, and I would like to thank Naresh Gilli sir for giving me this opportunity. And as usual, I'm more thankful to Premnath sir for joining me along with the session. And thank you all. Please do take care. Thank you very much.
Thank you so much for your time, sir. Thanks.